Okay, welcome everyone. This is the 2024 AMC GME charity review session. Obviously, we had a very big week of trading, so let's go over it. Feel free to stop me at any point. If any question is super laborious, I might postpone it for the end just so I can get through a chunk of it. But I won't forget. So really, what we all know the story of AMC GME. Like I think if you're not familiar with the story back in 2021, this is probably the wrong call for you. And so obviously GME has been essentially totally dead and down at $10. And what we see is essentially a couple weeks ago, we started to perk up a little bit. And it's so funny. Like this looks like a total rounding error in the scheme of this chart, but the truth is like this itself was a big move at the time. And so I always still have GME and AMC on my watch lists. I had not touched these for a long while. And so I saw that it had kind of perked up on that 5-2 day. I wasn't watching it that closely. On 5-3, I was still going about my normal day. As most people know, I don't super actively trade anymore. I mostly do my nonprofit work. I do the online content. It's hard to do everything at once. And this started to get my attention where towards the end of the day, I was definitely paying attention because we went from 10 to 18. So let me jump into that day with that context. And at this point, AMC still isn't doing much of anything. So, oh, did I just click the wrong thing? 15 days. Okay, there we go. We're going to go back and wow, it sure is amazing what has happened since then. So this was the day. And so I did end up making a GME video from this week. So if you haven't seen that, that's just publicly available on my YouTube channel. I'll rehash some of it. Maybe I'll not go in as much detail because I think we really want to focus on next week. But essentially, the stock made a really nice opening drive. We consolidate all day. I do think buying this break of whatever these exact highs are, it looks like we're talking 1380. I think buying that break and potentially even going into the options, because I do believe this unfolded on a Friday, that break is potentially very interesting. I wasn't paying that much attention at the time. I really started to pay attention once we went to 15. When we can't go down here, it's also not unreasonable to buy this break as well, which it looks like the high of this bar was 15.15. So I do think it's totally reasonable to buy this break. Generally, when I'm buying stuff like this, I do tend to give to prior bar lows. These are the 2-minute chart. So it would have been, I think, a totally solid trade to buy this here and give it to those lows, which then gets you stopped out here. And you might say, Lance, you only made 50 cents and you missed the bigger move. Well, okay, sometimes that happens. Some people do kind of give looser stops. Like I don't think there's anything wrong with potentially giving it to a moving average or something, or even just giving it to the original level, because these things really can get pretty wild. And the other thing that argues for holding it is this really didn't get that capitulatory. These up bars were fairly steady. For those that don't know, like one of the big measures of capitulation I look for is I want to see things really, really accelerate. I want to see the bars get hugely larger in size and ideally even do multiples of their prior ranges. I want to see the volume ideally do multiples of the prior ranges. So yes, we do get a pop in this volume here, but it's I don't know, maybe it's like 20% bigger than the other bars, so nothing crazy. I don't particularly love buying this break just because we haven't consolidated so much. It's kind of a little bit of a chase here, but in a stock like this, I can see it working, and it didn't end up work, but I'm not so convicted where I would have traded it. Overall, though, the real money shot is after when you get right this, even though it doesn't seem like a big move, this made a really big move. We held up really well. And one thing I talk about is doing being able to make analogies between different trades. And in your head, you really want to imprint what an A+ consolidation looks like. And so many people mocked me on Twitter when I tweeted about the Vivos intraday breakout. I don't remember what day that was, but Vivos was that biotech that made that big move. We consolidated, barely pulling back. We ripped through the resistance to highs, and the stock just epic exploded. And a lot of people got ripped holding through that, when for me, it was like, wait a second, like the stock made a big leg. It had like an A+ consolidation where we couldn't pull back at all. Like that is a textbook, beautiful, long continuation setup when that breaks. And so when I look at this chart, like we really were up kind of about, I don't know, 10% plus. We can't pull back much at all. And so the way I think of pullbacks and think about that stuff, I don't do some of like the bullshitty Fibonacci retracements, but I simply think of like 50% being a base case retracement. So when we went from, I don't know, call it 1250 to 1380-ish, that's a $1.30 move. I would expect like a 60-cent retracement because that's 50%. So I would expect us to kind of pull back into this range, and we don't get anywhere close to that. Really just eyeballing it, I would say we pretty much held in the upper quartile. That's a really nice hold up. And so then when we consolidate all day, and I talked about this in the VVOS video, which is also publicly available on my YouTube. Probably the most basic continuation pattern there is you make an opening drive off the open, you consolidate throughout midday, then around 1, 2 p.m. is when you break out. If you look at VVOS, that is exactly what it did. That's what a lot of stocks, especially with news, tend to do. Opening drive, consolidate all day. If the quality of that consolidation is really, really good, which this is, again, why do I think that is? One, because we didn't pull back more than, again, I'm just eyeballing it, I'm not doing math, like more than 25% of the opening drive. We then start to get really, really tight. We start to hold kind of higher lows consecutively. And you're really just not risking much on the setup, right? If I want to take a big picture buy on this, like in theory, I could even give it to the lows of this range. And the skew and asymmetry is really, really with you if you want to go big picture. And yes, calls were somewhat jacked up at the time, but like these things can really run. And especially on a Friday, like, I mean, it's worth risking a set amount of premium here on this guy. That said, I did not do any of it. What I did do is this, when this started to really, really go crazy into the close, this is more the price capitulation I want. This is more the volume capitulation I want. And now we're talking a really big move. This stock was probably up about, I think, 60% at the time for its prior day close. That is wonderful. Once we broke those prior bar lows, that's where I started to sell a lot of call options. The call options, despite having like 20 minutes left, were just trading at very, very silly prices. There were some major order flow inefficiencies. You know, somebody paid 20 cents for the $20 calls with like literally a couple minutes left. Like when the stock was here and going down, somebody like paid like almost like 2 to 3x the market price of what those calls were trading for, which it's just sloppy kind of retail buying, if I must say. So all those ended up expiring worthless. And so what ends up happening is, oh my God, it's kind of funny how you can't even tell. Let me see if I can slide over a little bit. That's much better. So GME ended up holding what essentially I consider like a pretty tight flag pattern, in that all of these subsequent bars were inside bars of the prior one, meaning the high and the low of this bar is inside the high and low of that bar. The high and low of this one is inside the prior one, the high and low of this one. And so anytime we're in that range, at least from a daily chart perspective, I view that as no man's land, where if I'm going to do anything, I want to be shorting close to the resistance, or I want to be buying close to the support. And so I did end up making an options trade again in GME. This was on the Monday, where we really quickly shot up to close to prior day highs. We did it in a way where the right side of the V worked again, where I waited for that turn intraday, sold some calls. If we got above, I was going to stop out. And literally the stock melted from there. And then, you know, the calls were down 80%. I'll pull up that intraday chart in a bit, but really, and I talked about this quite a bit in the AMC GME video from last week. I don't want to like at least big picture, I'm waiting for this flag to break either above for a long or below for a short. And so the way this ended up breaking, I didn't love intraday. And again, I discuss all this in detail in that other video, so I'm not going to like belabor it too much. The more important stuff is what happened next. But before I dive into that, there's a really important thing I want to point out, which is a lot of you, if you're paying attention to some of my work, you notice that I always talk about using prior bar lows when things are trending and prior bar highs as my default stop. And I talk about how when you're trading stuff that's very, very in play, that system can be very powerful. And so sure enough, we had our daily flag. If we bought that break of that flag of those highs, like I think it was 1750. Yeah, I'm right on that. 1750-ish, technically 45 cents, but whatever. If you bought that, my system, technically, the stop for that is the break of prior bar lows, or if we capitulate upside. So if we look at this, this day was somewhat capitulatory, but it's kind of like day one news. So maybe you sell here, maybe you don't. It's kind of like a tough judgment call. Or this was definitely capitulatory where I'm just shorting outright at that point. But even if you just said, okay, I'm going to blindly use prior bar lows, you were buying 1750 with like a $2 stop, and that would have stopped you out at 36. That is an epic, epic, epic chop. So in no way did I expect Roaring Kitty to come out and do what he did. In fact, not only that, but I didn't even take this long to be honest with you, because I just wasn't that confident in it. But that just speaks that like when you do have a good system, a system that really captures trends, a lot of the time you can capture this kind of asymmetry. Now, vice versa, if we look at the short side, if you shorted this capitulation and you were going to give some as a swing, if you held to prior bar highs, well, guess what? We still haven't broke prior bar highs. So if you were shorting anywhere here, like let's say you shorted, I don't know, even 55 or 60 against the like that $5 of risk, that's already paid off so many multiples. Like at this point, like because this capitulated down to the moving average, I'm just covering like in my course that I'll eventually release. I talk a lot about the geometry of the chart patterns. And so when this opens up at like 21, if you're using prior bar highs, your prior day stop is up at 36, like $35. There's no way on earth I want to risk giving back 14 points when it's retraced just so much. Like essentially the whole move was retraced. The odds of me making another 14 points and this going to like $6 is nearly zero. So I would have covered at that point, but the real demonstrative point that I'm trying to make is like you can have very effective, simple systems that would have caught, yeah, not perfectly traded this, but it definitely would have caught like a good chunk of it. So let me take a pause there. Are there any questions on anything I've discussed? Anything you want me to dive deeper before I get into what happened with Roaring Kitty? Going once, going twice.
Lance, I have one actually.
Yeah, hit me.
So when I think it's on the 4th or the 6th, when you decide to sell against like that 17 high, what other sorts of things do you look for? Like obviously this is starting to be in play, but like you said, even because you didn't take that break, you're not quite sure if this is like super in play yet. It's not like going into the bands or anything. When are you willing to like short on that like sort of double top sort of thing, and when aren't you?
Sure. And so one other thing, I knew we just got one more attendee. Welcome, my friend. Obviously, as I said to the other guests, this is being recorded. If you do not want your name or your face to appear, stay off camera and everything. I know some people here do work for firms and whatnot. So this question essentially was on this day, the 5-6. So one general kind of Lance principle is if something has capitulated, my base assumption is that that high will kind of remain the local high. Like that was kind of my assuming no news and stuff. So that was kind of my belief for stuff like SMCI. That was kind of my belief for ARM Holdings, which all of those things I kind of was structurally holding short. Same even for gold. And so this capitulation wasn't so great, but okay, it was good enough where I was interested. So now let's discuss some of the things on the daily that appealed to me, which I think was essentially your original question, right?
Yeah, pretty much.
Yep, cool. So we had a very beautiful move that went into that capitulation like we had discussed. And then we start really weak. And so not just am I looking in general, I'm not going to blindly short against these highs, but what I do love about this is how it got there, right? So we made a little leg from 15 to like 15.50, just a 50-cent leg. We do almost kind of an unclean little wedge and break that wedge. If the first leg was 50 cents, my base case is maybe this goes to 16. Instead of going to 16, this made a super sharp move all the way up against those highs. And so I would argue that it wasn't perfect either, but this was a pretty big leg to go from 15.60, like a buck 50 with pretty minimal consolidation, and it held prior bar lows very well. So this moved cleanly enough and sharply enough that I was interested in shorting the right side of the V. Not that this was by any means an A+ setup. The short on the prior day, I think was much better, but because the prior day capitulation, because we opened kind of weak off the open, because the second leg was pretty big, those made me think I'll at least give it some risk. This did end up melting pretty damn hard. I don't think that would have been my base case. And so to even touch on this, some people were asking like, oh, why not buy puts? Like I addressed this in the other video and I'll address this again probably later on in this trade, but the IV just gets so blown out on some of these moves. And when you have really huge IV, I generally am almost always a net seller. I want to, in periods of low volatility, I want to potentially be long calls to catch the move. In periods of blown out volatility, not always, but nearly always, IV becomes so expensive, especially in these names, that I'd way rather be a net seller of just the stock or volatility, because like the break even on this, not that I have the quotes in front of me, but if you looked at puts on either of these moves, it was just so expensive where like, I guess because this melted so hard in a straight line, you probably would have been fine. But I do think that when volatility is blowing out like this, you got to be pretty choosy with the puts. Not there are times where it applies. Like for example, like SMCI and its exhaustion day, that had been in a range intraday before it kind of broke. Nvidia was kind of the same deal where it's in a steady grindy range before it breaks. And the IVs on those weren't that jacked because of kind of ape madness in these. Implied vol is just insane on this stuff. It's like if you looked at some of the calls or the puts in FFIE last week, like those were just stupid expensive where you can't really, I mean, you were talking about like the stock was at like, I don't know, 70-80 cents, but like $1.50 call was 20 cents, where it's like, man, that's like a third or a fourth of the share price. So yeah, does that kind of help? But I guess in an ideal world, what I really would have wanted was ideally for this to like this red bar, that's kind of like a mini, these two bars are kind of mini consolidation. I would have loved for this to even be more of a quick waterfall with a bigger tail there, whereas this was a little bit grindy. So I'd give this like a B. It warrants some risk, but in no way am I going nuts.
Cool. That's helpful a lot. Also on the options point too, this is a Monday, right? So compared to like SMCI and Nvidia, that also I guess makes them
Yeah.
even more expensive.
You're paying for a lot of time. Correct.
Yeah.
Correct.
Cool. Thanks.
You're welcome. So now, okay. So now let's talk about 5-13, and even more important, let's talk about 5-12. So I don't know what time it was, but essentially Roaring Kitty tweeted, focus mode engage meme for the first time that he has tweeted in many years. Oh, wait, hold on. Let me just check the chat. I do have a bunch in chat. Um, okay, cool. You mentioned buying. Oh, yeah. So, okay. Hold on. So, Dan, I'll get to your question in a quick second. If we were taking the breakout near 13 bucks, what would be the stop? Would it be the low of the consolidation? So let me jump to that super quick just to answer Bob's question. This is very good. Bloop. Boop. I try to add sound effects to make it more entertaining for everyone. Sometimes it works, sometimes it doesn't. Okay, here we go. So the question was, if we do that 1350-ish breakout, what would be the stop? So there's really kind of, I guess, even three ways to do it. I don't think there's necessarily a right way. I don't have any strong views, I guess, on what the right way would be. And sometimes I do a mix of these, depending on how much I love the setup, as well as the liquidity. So this is a type of stock where obviously it's pretty damn liquid. So I kind of view three viable choices kind of for this break. If I'm going to buy this break, let me figure out what the exact penny was. I think the highs. So it was kind of like 1380-ish or so. So the first option is to be super tight and give it to the, like, literally that level is going to be your stop. So if the highs were 1378, I'm going to buy 1379. And then I'm going to give it literally just like 2 pennies and try to hit out 1377 or whatever. And so a lot of that allows you to have super tight risk reward. But of course, like, you're going to have super tight risk and you have asymmetric reward. But the tighter your stop, what that does is it gives you a higher chance of being stopped out. And so this is what's so important. Like, so many people think about risk reward in a vacuum. Risk reward is totally meaningless without the win-loss ratio, right? Expected value is the confluence of those variables. So if I give a looser stop, right, if I give it to the bottom of this range, the probability of me stopping out is going to be way, way less. But of course, my risk is way jacked up. So the real question is, how does me giving extra risk here and lowering the reward to risk, but increasing my win rate, does that justify it in expected value terms? Some of these questions are really hard to answer big picture. Like, some setups I feel strongly about. This setup I don't really feel super strongly. Like, if I had to, I probably would be doing the third stop that I haven't mentioned yet, which would be prior bar lows. For the most part, like, I would probably either give prior bar lows to this or the bottom of the range, because GME is the type of stock that can get very, very wacky. I think that is worth an argument for a looser stop to kind of catch the bigger picture move. Like, I think with this, like, I'd probably want to go big picture. So yeah, I'd probably either just risk some premium to the bottom of this range or risk some stock, or give it prior bar highs and be a little bit looser for those reasons. But these are really hard questions to answer super confidently because every situation is different. And so then you made the comment, I was preconditioned to only buy breakouts that have super high volume and strong candles. So this looked kind of meh. Obviously I was wrong. And overall, like, I think that's not like a bad heuristic, but I'd say there's also different types of setups. Stuff like GME is kind of reflective in the sense that, like, and I'll discuss this more on the point that I was about to make about the Sunday trade. The more GME goes up, the more people want to pile in, which is actually the opposite of how normal things function, right? Like, generally, if a stock gets more expensive or goes higher or has bigger days, people should generally be like, oh shit, I don't want to pay more for this. But paradoxically, like, the more GME goes and the higher the volume, the more attention and the more the feedback loop compounds. So you get more and more people talking about it on Reddit, more and more people talking about it on the internet, more and more people YOLOing into calls. So this is a type of thing where, like, GME in particular has like that really that feedback loop where it can start with a whimper and go out with a bang just because you get that. So like I don't think that kind of heuristic of buying breakouts with strong candles and high volume is bad. But I think that's kind of how I would think about this one, especially just because like the consolidation held up so well. And I would also argue that in the moment, you don't know how strongly this is going to break. I don't really wait for confirmation. If the level's 1378, I generally want to be buying 1379 and 80. So then you don't really know if it's going to take off a lot of the time, but you just judge it based on the setup. So I hope those help. If that didn't help, let me know and I can circle back. So then Dan asked the point that I was going to, okay, hold on, more questions. Do you consider the history of the stock, like if it's a former runner, in your game plan? So I definitely think you need to take the context of the stock into consideration, because I think that consideration is real, right? Like, how many stocks am I going to buy YOLO calls on? If it's gone up like 50%, like pretty much none, except potentially like a GME AMC. And so that's going to come into context with this next point. So yes, you definitely want to take the stock history, and even also do these stocks tend to fade, or do these stocks tend to gain momentum? So yeah, some of the gap and crap stuff, those tend to just be ones that have a history of fading, whereas this has a history of reflexivity and gaining momentum. So then Dan had said, you mentioned buying in the Sunday overnight session. Did you have any concerns about liquidity and stops, or were you so certain of being early to a big move that you weren't worried much about the downside risk? Did you know that upside prices were collared in the overnight session? These are all really good questions. So let me add to that context now. Okay. So what is being referred to is, as we were getting into on 5-13, that was kind of the gap up. But what happened is on 5-12, Roaring Kitty had tweeted for the first time in years, and he had done his focus mode engaged little meme. And so obviously, especially at that point, we don't know how to interpret that. But it like, let's say GME, you can get totally from flat. The probability that it's too coincidental that GME has started to run and has started to kind of gain a lot of traction. It's way too coincidental for me to be that he tweeted that just totally randomly. Like, come on, the stock hasn't done anything for what? It's been 3 years now, and it's perking up, and he tweets that. So my guess, honestly, which I'll have no way of proving, but if I had to guess, a lot of this move on 5-2 and 5-3 was driven by call volume. And my guess, yeah. So Bob just said someone had bought 1 million calls expiring 3 weeks out when GME was at $10. Yeah. So thank you, Bob, for that context. I have a friend who is a very experienced options trader, and he pretty much literally on 5-2, he saw these options flow going through, and he was on this in 2 seconds. And so my guess is Roaring Kitty was the person that was buying those options. And he had this plan to, like, some people are like, oh my God, the account was hacked. Like, bullshit, bro. This is literally the most intentional, deliberate videos I've ever seen. Like, nobody else is spending that much time. It was very carefully curated. So he does this tweet, and my guess is, yeah, he's been just boating the shit out of this thing. He does this tweet on Sunday night. I only saw the tweet. I think Nate of Investors Underground retweeted it. And so then I saw the tweet. And so I wasn't even like thinking that much. I wasn't thinking, oh my God, I need to go buy GME. I had actually never done overnight trading before. I had been aware of overnight trading, and like, I think it came up once before. I don't remember in what, but I'm like, oh wow, that's kind of interesting. Maybe during the SMCI stuff, I was seeing that, and the NVIDIA. And so I logged into my account at like, I don't know, maybe 9 p.m. or something, for no really good reason, like just on my phone. And because I always like, I had like, because I was trading it, I had like 100 shares of it because I was trading the options. Like I always have like a little tracker just so I can easily see what the stock is at. And so I saw it printing at like 19 and $20. And I'm like, whoa, like, wait a second. Like, oh my God, Lance, you're a dumbass. Like this is moving because of the Roaring Kitty tweet. Like, oh my God, like 100%. Like if Roaring Kitty's back, like you need to understand, like Roaring Kitty is the biggest catalyst for this name. Like there is nothing that can move GME like Roaring Kitty. He sent the stock from 10 to 120. Well, split adjusted, it was really probably like 2 to 120. And so the fact that this guy's been dormant for 3 years is now tweeting focus mode engaged, which is a meme that I think started to spread from GME's Twitter to begin with. Like that is a big deal. And if he in fact is back, then this stock isn't just going to go $2. This stock is going to reignite the movement, right? Who has had the ability to buy and boat options into this move yet? Like nobody. It just happens on Sunday night. So it was my first time trading overnight session. It was not without its issues, like truth be told. I guess there's like they have like price caps just to make sure nobody does anything dumb. And so where GME was trading versus the prior day close, it was beyond the price cap. So like literally every order I was submitting would get rejected, and I would have to order by order go to like interactive customer support, which because it's a Sunday night, it's not as if it's you call someone and they're like, oh, hello, how can I fix your price cap? So it's like I'm dealing with like this shitty customer support order by order to get them to raise it. Like they literally could not just do a blanket raise. They're like, you need to report every single order. And it's like, oh my God. So it took me a stupid long time to get filled, which sucked. But I was shocked about the liquidity. Like I don't really know who's on the other side of this. Like I guess someone out there was selling, but like you were easily able to buy like 2K a pop, 2K a pop, 2K a pop. And like, it definitely took me a while to accumulate a position, but like the liquidity was kind of shockingly like I ended up buying like 45,000 shares. Like, especially if I was earlier to this, you easily could have done 100,000 shares, 150, 200,000 if you were accumulating over a couple hours, which was kind of shocking to me. I never had done this before. And so Dan's original question was, what were you thinking about liquidity and stops at that point? Or were you so certain of being early to a big move that you weren't worried much about the downside risk? And so, yes, the upside prices were collared. But, I found that out for the first time, and that was a pain in the ass. So as far as the stop, I really wasn't so worried. Like my thinking was like, okay, if this ends up being a big nothing, then like this probably just like goes back to the unaffected price, and maybe I lose a couple points. And I felt that the odds of this being a nothing is probably like 10%, right? So it's right when so every decision is grounded in expected value math. Like literally as traders, every bet we make needs to be grounded on it. And so I was thinking like, okay, what are the odds that he's tweeting and this is just a random tweet? I felt, I don't know, less than 20%, probably less than 10%. And if so, in most cases, I lose 2 to 3 points. Yes, you could say like, Lance, oh my God, what if they have an offering that morning? Like it's unlikely. Then you're talking about like a 1 to 5% thing. It's like, okay, that's bad, but it's very unlikely to me. The base case to me was like, okay, there's an 80% chance that this tweet is intentional. And if this is intentional, this is going to start such an insane wave of boating calls, and the reward could be so asymmetric on this. The other thing is like when you compute that math ends up really, really, really good. And the other thing I was thinking is like, so I have this thing that I call the CNBC heuristic, and that heuristic is this piece of news something that is going to reverberate through markets? For example, Bill Ackman tweeted last year that he had covered his short in the bond market. That's the type of news, because Bill Ackman was vocally short bonds, treasuries. When he tweets out that he covers his position, like if you see that tweet, you can act first. Most hedge fund managers aren't staring at Bill Ackman's tweets. Most like big money traders aren't like that glued in like a day trader. Part of our edge as a day trader is we can be super glued into news sources, our screens, and lightning fast. But the odds that Bill Ackman covering a short was going to literally be all over CNBC and every news story is so, so huge. The other good CNBC heuristic I like to discuss is that original tweet last August, not tweet, that original news article last August when weed was going to be decriminalized. Potentially, it was being considered for decriminalization. That is a type of news article that by the end of the day, it's going to be on every news source imaginable, and people are just going to be talking about it in their homes. And so this roaring kitty tweet is so beyond the CNBC heuristic. Like, not only is every like it's going to make it onto Wall Street Bets, it's going to make it onto CNBC. Every day trader on earth is going to be like, dude, did you see that Roaring Kitty tweet? And what was interesting is when I saw that tweet and followed Roaring Kitty, he had like 500,000 followers on Twitter. By the next morning, I think he was up to like 1.2 million, and now I think he's at many, many, many millions, which goes to my point that like there was a huge feedback loop that was going to go from that tweet. And not only that, but we already talked about the reflexivity of this stock. The more this goes up and the more people that boat it, the bigger and bigger, more people want to get sucked in. Okay. So let's see. So now let's jump to that. So I was probably buying in, let's see if I can find this day. This was it. Oh, and so the other thing too was even pre-market, you could have bought at, oops, I just lost it. Oh yeah. Yeah. So even pre-market, you could have bought in like 20 to 22. And so I was even adding when we, not that this was so perfect a level, but when we broke through 22 here at like 7 a.m., I even added there. Why is that? Because I felt like, wow, this news is going to be big. Everyone is in fact already talking about it on the internet and Wall Street Bets. Then the other thing why I really wanted to, who does anybody want to take a guess why I really, really wanted to hold my position into the open? Who's going to be a brave soul that guesses?
I'll take a guess.
Yeah, hit me, Sam.
Well, I would assume that lots of your retail crowd are not going to have access to pre-market trading as they're probably on like Robinhood or whatever. So a lot of them will be smashing right into the open.
That's okay. That's part of it. That's certainly part of it. What else can't be bought in the pre-market?
Options.
If you're a retail trader and you have $50,000 and you're going to YOLO on this, do you want to buy 50,000 of stock, or are you waiting, praying, just please open this stock at please be 9:30 a.m. so you can dump all $50,000 into YOLO call options before everyone else does? And my hunch was the whole market of apes out there, they're not going to be buying the equity. Like the equities, people like me doing this pre-market and waking up and real traders for the most part. And like the whole bulk of the world out there is waiting for the open for options to start trading so they can just pile into that. And so I don't have any, there's not many comparables to this, but like my gut really told me that like, man, I think people are just going to YOLO into those options, and this could really go. And so what I ended up doing was I did take some sales into the open just because at that point it's a big move. And so these highs, we do open, and I don't know, call it the highs like 27-ish. We start to dip off the open. And for me, like, I really thought this was just like, okay, I wouldn't short this. Oh, the other thing too, like, so I had some people on my pod that like were texting me and they're thinking short, and like, they're like, oh my God, it's such a big gap up. And my general response to them was just like, dude, like why the fuck are you thinking short? Like, this is the biggest catalyst you can ever get on the stock. Nobody whatsoever has been able to buy options. Nobody's been able to position into this. Like, this is going to reverberate through all of the trading world. Like, you can't be thinking short off the open. Like, it's just not that crazy yet. And so I wasn't doing anything into this dip. I think if you don't have any position, buying this crossover into this limit up, like when we break the opening range highs, this is where, like, I think if you don't have anything, that's a great spot to add. And so now again, we were talking about the 2-minute bar system. Look how insanely well that works. Boom, 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 boom. We get halted, we open flat, we kind of wick, then we turn. So I don't know if I would call it lucky, but like all the stock I had, I was holding, not all of it, but I mean pretty much all of it. And so then I was able to catch this whole trend. We start to go euphoric. And then once we turn, at this point we were getting pretty capitulatory. So I had some offers in here. Then once we turned, I pretty much got out of like nearly everything. I didn't flip short because, well, truth be told, I didn't get like pre-borrow that morning because I wasn't remotely thinking I'd want to short this, which was kind of dumb. I probably should have got pre-borrow. But I do think, this is probably worth a short as well. And again, same system using prior bar highs. So like some of the easiest money is always with the trend. And yes, I talk about a lot of capitulations and everything, but like, man, oh man, if I think about what trade had the best expected value, like without a doubt, being with the trend on this huge news catalyst with so much asymmetry, like buying in the 20, I mean, I probably bought everywhere from 19 to that 22 break. All of those prints just had so much asymmetry. Like the probability that this thing caught traction, I know that it's not like some super defined, oh my God, my stop is 10 cents or whatever. But being a bigger picture trader, if you're a swing trader, like these prints just had so much asymmetry where I ended up making like 16 points on some, like again, if you were to plug that math into an EV calculator, well, not an EV, I mean, just do the math. Given what I perceived as the likelihood of this was this was probably the best trade I took, honestly. I then didn't touch it the rest of the day. Oops. Did I just mess up? Yeah, I just messed up. I didn't touch it the rest of the day because at this point, everything in here is no man's land to me. I've done a video on no man's land. If you've not seen it, I highly recommend it. You just Google the one land speed, no man's land, YouTube or whatever. Really important, but most people tend to chop themselves up and do a lot of paper cuts in here. None of this clearly trended. The only places I would have done anything is if we consolidated up here, then broke to highs, like the pattern we were discussing that other day, the VVOS kind of intraday, or if we then ended up sitting really close to these lows at about 25 and then broke later in the day. We ended up holding mid-range. I saved myself a lot of churning. I would imagine I would have just lost money all throughout this. What ends up happening is like, we do end up perking up after hours, like, especially once this starts to go after hours. I don't think like it's the craziest thing to have a little bit of a long, just because this stuff can get pretty nutty. I did not have any long. So let me see. So Bob asked, how would you time or judge the top on the ramp up? Every bar seems capitulatory to me. Okay, that's a really good question. Okay. So well, first of all, like this bar, for example, I would say is not so capitulatory because the range isn't expanding. And like, keep in mind, like this has a massive, huge catalyst. This stock has proven itself as being able to really break from price. So this is kind of the break above intraday highs bar. And this is kind of like bar one of that breakout. This is an inside bar, which really isn't that big. This is kind of the same size as this one. So now, like, I mean, so I'd say like it's a mix of like none of these bars were like, oh my God, so insane. But then most importantly, because we're just kind of holding prior bar lows as well. And the volume isn't doing anything so insane. I know there are some halts in here. So you can't like, the volume's not totally reflective just because like, some of these bars only traded very shortly. Like I'm sure this bar didn't last long at all. So it is kind of an art, but I would say unless it's like, oh my God, this is slapping me in the face as being so capitulatory, I really want to try to give prior bar lows when it's trending like this. And so I do as part of the course that I'm doing, there's going to be some really good videos on like how to gauge overextension. The other thing with a lot of these bars is we're kind of in line with the Bollinger and not that far away from the moving average. Whereas this one in particular, like when we hauled $37, so first of all, the Bollinger is only at 33. So we're $4 above the Bollinger, and we're like $8-9 above the moving average. So now that's some really, really big distance. If the moving average is kind of like my base case for a retracement, which notice guys, we did end up retracing exactly to that moving average. Now like this was the first bar I would say where it's like, wow, we're really overextended at this point. Because even these are kind of like wicky towards the downside. They're not really waterfalling up. So kind of art and science. Part of it was just simply holding prior bar lows. Then also we're just not that far. If we were to blindly use your system, would the entry be a bit above 34 and stop at 38? Well, no, I would say the entry would just be back here. Buying the break of the opening range, then giving prior bar lows, which then, so a lot of times I'll use this as essentially, this is essentially a bar, even though we halted there. So like, I'm going to try and get out, like if we break below there. So yeah. And so prior bar lows, I'm really just taking like, okay, this low is above that low, this low is above that, this is slightly above that, this is above that, this is above that, and so on. So I'm really just using the low of each prior bar. And so, this bar's low technically was 3670. This was just stuck at the upper limit. So once we broke 3670, that's where I want to try and get every liquidity I can. Okay. Any other questions on this day for now? So this was really my best single trade actually. Not that I even think I got that aggressive, because I don't think the risk was, the risk was probably only like 100K, which isn't that crazy. Any other questions on this day before I go to the big one?
So it seems just like most of your edge or idea flow or conviction came from anticipating all the liquidity that you thought would be dumped into this stock. So like you were able to get a good entry in the overnight and then early in the pre-market and then.
Yep. And so essentially in some ways, I kind of viewed this as just being breaking news. Like, okay, this was a huge news catalyst. And I would say like this isn't kind of my bread and butter trade, just because a lot of it, you do need some overnight faith. You do need to, I think when you've done a lot of news trading, you start to build an understanding of what catalysts really, really move stocks. And a lot of that comes from experience. And so for me, a lot was just recognizing that like the biggest catalyst. So when I was shorting those calls the week prior, I'm always thinking about the risk. Like, okay, what could go wrong if I'm holding these calls? The number one thing that was in my head was like, oh God, like if Roaring Kitty were to say he's long, I am going to get my ass just like totally smoked, and I need to be ready to hedge the shit out of this, right? I had a huge margin of safety because I was selling like $20 calls. So I would have had like 3 points to, you could still even just fully hedge or whatever. And so it says something where that when I'm thinking of what would be the catastrophic risk if I was short and it's Roaring Kitty's back, then Roaring Kitty a week later is actually back. If you invert that, it's like, wait a second, if I would have been scared to shit, oh my God, this is my worst case scenario if I'm short. And that's probably a sign I want to be long. And if you're able to get long at 2021, I know that's somewhat unsatisfactory, but a lot of that just comes from experience trading news and knowing like, oh my God, this stock could really, really, really go. Because The other way I thought about it is this stock was up like 50% on nothing the other day. If this stock closed at 18 and was up 20 on Monday, even on no news, I wouldn't have been super like questioning it. But then if you tell me like, wow, the biggest catalyst in this stock is back, and like really there's only one way to read that tweet, I think, which in my opinion was, oh my God, he's back in AMC. Then yeah, it was something where it's like, look, I'm going to play this big picture. So I would say that's not common for me though. Like this type of trade, like that long, probably makes up less than 2% of my trading. What I do the next day is far more typical for my trading than what I did there. But it's just, you know, it would be the equivalent of what's a good example? You know, it would be like Putin saying, hey guys, on Monday, I'm going to escalate the war on a way that's going to shatter and change the whole paradigm around the globe. It's one of those things where it's like, hey, I'm not so certain that's going to be a really big deal, but like if I can get near unaffected, there's only one way to interpret that. That's probably going to be bad on Monday, and you're putting the asymmetry in your favor. Anything else for me on this day before we really kind of get to the day that I think was where the biggest money was made? Okay. Let's see. So this was 5-14. This was the what ended up being, with the power of hindsight, the peak. And so because I thought the prior day was somewhat capitulatory and like we closed mid-range, I actually got somewhat lucky in the sense that I got a normal night's sleep. Like I didn't think the stock would go crazy the next day. So I really appreciated the fact that almost like ignorance is bliss. And like I went to bed and had like a good sleep, which I was going to end up really needing. And what ended up happening was I woke up like right around here just because of the time difference. I woke up at, I don't know, like 6:40 in Chicago time. And so I had missed this whole up move. This move, like going, like first of all, if you're awake early, I do think it's pretty reasonable to buy some of these breakouts. Like I think even, you know, if you're up, obviously not for size, like even we're talking like, I don't know, 1,000 or 2 shares, buying this breakout or that breakout when the stock is going like this it's probably worthwhile that and likely that you catch some tail skew like what actually occurred. So I don't think either of those are bad. I'm not doing them for meaningful size. So what ends up happening is this stock kind of shoots to 80. I do think you can make an argument for shorting prior bar highs here. Not that I love it, just because it's that wick is just so far higher at this point. And so I wake up, I don't know, probably somewhere around here, and I see, holy shit, I can't believe that thing went to $80. That's a crazy move. And so in general, let me actually take a step back. We need a 5-year chart. So keep in mind, this stock has done its little splits or whatever. So the all-time highs were 120. Keep in mind how ridiculously crazy that was. Everybody was at home YOLOing. Wall Street Bets was like the most cool thing in the world. Like my brother's YOLOing, my friends are YOLOing, your grandma's YOLOing. Like everybody was in on the YOLOing. And that sent the stock, right? It went from here all the way up to 120. All-time highs, insane volume. So another kind of general Lance rule is like, the first time there's a really big catalyst, the first time is always going to be the biggest. Not always, but it's my heuristic, right? Good rule of thumb. The first kind of event will always be the biggest because you get people off sides. People haven't been able to adapt. So when we started to get the crazy CPI numbers with inflation back in 2022, the first couple inflation numbers, when they take everyone off guard, oh my God, inflation's back, those will have the biggest effect because people are off sides. By the end of 2022, people were already like aware of the inflation game. Oh my God, inflation's here. It's a problem. I need to like rethink and position that. So as part of that thinking, when this was going to like 80, my general thought was not that it's impossible for us to break 120, but like in my head, it was just going to be, this is really, 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 really unlikely that we ever go back there. The other reason for that too is short interest is nothing like it was, and borrow is nothing like it was, and the amount of people YOLOing is nothing like it was. So you had all these, and people expect this. Like the implied vol on GameStop was already through the roof. Like if you were buying calls at that point, it's like, dude, where do you expect this thing to go? Like the vol was just so crazy expensive. And what happens when the vol is so expensive is like a lot of that stuff just expires worthless, and you know, people lose their capital. And so that big picture context is important, because essentially for us to go to 10 to 80 in like a week or two, and especially really going 20 to 80, that is a big chunk of this overall move. Again, like that bias that, hey, odds are, right? Anything can happen. I'm not going to be an idiot, especially in a stock like this. Anything can happen, but man, 80 is no joke. 80 is definitely no joke, especially when you consider the amount of dilution that has occurred over this time. The market cap as a result of that dilution, way, way bigger. So that is important. Oops, wrong thing. Okay. So with that context, I do think going from like 30 bucks to 80 pre-market is pretty damn capitulatory. Oops. Sorry, they make it really hard to kind of navigate these weird big moves. So I woke up somewhere in here and I was like, holy shit, I can't believe that thing went to 80. That's a pretty damn big move. So when this went like this, so I shorted, I did my first entry, which was to short 5,000 shares. I think I shorted like 78, 79-ish. And people are like, Lance, like, why did you short the left side of the V? Why don't you wait for the turn? Like, oh my God, you break all your rules. And that's again why context is important. The difference here is because of how euphoric this move is and how deep that pullback was, I was expecting this to make a lower high. And the beauty of this having already done that, and the whole part of the beauty of the right side of the V is waiting for the turn gives me a stop. And the difference though is when this is already capitulated and pulled back so deep, I can short like a 77, 78, and I have a stop. My stop is going to be at highs. And so I shorted like 78s or whatever. And on the left side of the V on the way up, because I was just going to then give it to 80 bucks if we got above there. By some miracle, 80 held, which I don't think it's that much of a miracle. I do think given the steepness. So when we talk about nuances, the steepness of this pullback matters. A lot of people are not nuanced enough. If these bars here, if we're just sitting up here and consolidating, I do not want to short that if we're up here and consolidating. But this thing essentially went from 60 bucks to 80, then we pulled back like, man, almost 15 points. Like that's a really, really huge pullback. That's way more than 50%, right? You know, 60 to 80, the 50% pullback would be 70. We went all the way down to like 66. So the odds that this was going to break highs felt, I don't know, less than 50-50 to me. So I didn't really know where this short would win out for me. But I just felt like, okay, the asymmetry is in my favor. This could be kind of a big picture top. And the other thing I would add is like, at the end of the day, I don't really know. You're never that confident. Like so many people are like, oh my God, how did you know that was the top? I didn't know it was the top. I had no idea it would be the top. In fact, I'm sure I was like somewhat scared, just like everyone else, just because like this, you know, these tickers, when they break, they can do super wacky things. So like my confidence level that this was the top was maybe 40%. But a different question from that was like my confidence level that was the top was 40%, but my confidence level that this was a good trade, like Not that that'll be the top for the whole day, but that I have good risk reward catching a counter move with probably like 80-90%. And so, yes, in theory, you do want to wait for that little turn and hit like the 77s there once that prior bar breaks. You know, I did the front side just because I had to stop anyways. So then what ends up happening is we get down to 70, and this actually has a buyer that ended up holding on the tape. And so I got this question actually from Abdullah, who's a dude I did a podcast interview with. And he asked me over the weekend, like, hey, Lance, you talk about reading the tape a lot, and he does kind of futures and Forex trading. And well, guess what? You don't really get moments like this on the tape in futures and Forex. Like, part of why I'm such a huge proponent of equity trading is because we have boxes on in-play stocks that you can really use and interpret. So there was a buyer at around 70, and once that buyer broke, that's where I added. So again, I'm using like the box as kind of a added measure of edge there. And this is also breaking the moving average. So I thought this was pretty good. I can give potentially just like a couple points. So what I add at like 68, I'm not going to give to 80. What I'm shorting up here, I'm giving to 80. What I'm shorting in here, I'm probably just giving a couple points to like 72. And sure enough, this really, really melts. Now this is the same, like that's a pretty big move at this point. Like to go from 80 to 55, essentially the stock has lost 30% in like, I don't know, 10, 15 minutes. That is a big move. And so I was definitely covering some onto the downside in this. And then I ended up even flipping long just because that's a really damn big move, and I thought we get some type of counter move. So when I'm getting long here, I'm I'm longing way less size. That's where I'm just doing a couple thousand shares, but like you can really add up some P&L cushion on that stuff, right? Like if I'm buying kind of 59s or so and risking, I don't know, 2 points, but you make, I don't know, a fair amount, like, I don't know, at least $5, you can really add up some nice P&L. And so for a lot of this, I was kind of in and out doing that. And so then going into the open, I didn't have some strong, this is pain in the ass. So because this was so deep of a pullback, my confidence that this would remain the high was probably increasing. Like if up here, I was probably like 30-40% confident. After this pullback, the odds change. Like people need to understand, like the probabilities are all dynamic. Like if this thing were to have pulled back to like 40, the probabilities that this is the high probably goes up to like 90%. So as this has its steep pullback, I'm even more confident that this might remain the high, and that all the wackiness got its way out of it. And then I'm also going to be even more aggressive. And the beauty is I also have a stop. So one thing I want to pause just to jump to, well, actually, let me pause just for a second and see questions. So Bob had asked, is there any reason why stocks like to grind all day and have a fight in a range just to explode 100% on no volume in the after hours? I mean, I don't think there's any reason other than like after hours and pre-market, you just have less liquidity. So like I kind of think part of why this moves so much is you probably get like a lot of options market makers that are just off sides. Like when something gaps, right? Like a lot of if you're short a lot of these options, if you're an options market maker and you have this exposure and the stock gaps, you need to then hedge that exposure, right? You come in the morning and your exposure is meaningfully different as the stock is moving. So I think what happens is as this goes from 50 to 60 to 70 to 80, all the people that are short these calls say, holy shit, like I'm getting, right? Your deltas change as these things go more in the money. And so you're effectively more short. So that kind of creates this buying when there's a period of not that much liquidity. So I'm not super confident in this. Like I'm not an options market maker. I don't work for these firms and I can't tell you like the inner workings of their thought process, but that at least is my best understanding of why you tend to get some of the wackiness pre-market. how often you get chopped up trading with such a tight stop? I mean, in general, like I'm picking scenarios where the nuances where one, the stock is very in play and the nuances tend to be pretty damn in my favor. So as we go through this chart this day, like you're gonna find that like I actually didn't take any losses this day. And so how is that possible? Because I'm just really choosy with where I'm getting involved. I'm staying out of a lot of no man's land, and I'm really just playing the extreme situations that then allow me to really not take too many rips. If you did trade the first prior bar break, would you have used 80 as a stop or prior bar highs? I use prior bar highs. So Zach, my understanding is you're talking about right here, and you can just nod if you want. No,
The first one, like
off the open.
no, before like the first after it moves from 40 to 80, like that first kind of crack.
Here?
Yeah.
Oh, so okay, sorry. Um um okay, yeah. So when that's a good question. That's a really good question. So Zach is essentially asking if I shorted this turn, would I have given it to 80 or would I have given it to 78, right? Is that correct? And so I always want to give it to the highs. So prior bar highs is really for once something is trading. So the default is going to be to the high of the move, but once time elapses, that's when it starts to trail down. So yeah, I don't view this as necessarily significant. And
Oh,
what I definitely don't want to do is like so often you can get kind of like a lower high that perks up into that. Like, I mean, this really collapsed, but you'll see a lot of times that either intra bar or in this next bar, like you can get a high of like 79, and I don't want to cover so close to those highs. So yeah, I generally want to give it to that high.
and what about like the 72 level? Like once it starts working in your favor, it starts going like, yeah, into that consolidation kind of thing.
What about it?
Like when it breaks that bar,
You mean like here?
yeah, right there.
Yeah, so here I'm probably covering, honestly. Um, not that I love this so much just because of the range on this bar, like but it's definitely worth a short. But yeah, I probably am covering because like I do think like until this stock kind of really proves that it's dead, you need to still be scared of what this can do, especially like if this thing ramps pre-market. So like I do think I need to take that because I am scared that this does exactly what it did, except then goes to highs. And if that happens, it's gonna, you're gonna be really kind of scrambling for liquidity on that break. So yeah, I think you take that. Um, any other things for now before I get into the next part?
I'm not sure if the next part is once market opens, but I'm definitely curious how you would have played it off the open as well.
Yep. So let me quickly jump to AMC because where these are going to be in tandem. Oh God. So once Roaring Kitty was doing all of his tweets that prior day, AMC started to really, really go. And there was a theory that, oh my God, he's doing all these movie clips. Like maybe AMC is the one he's long this time. And I think that's why AMC started to really, really ramp into the prior day. And what was so funny is like, not that I felt so confident, like my friend, I had a friend who thought it's very likely it could be AMC. And so he actually ended up long overnight into all this. And he told me like, oh, it's a lot of movies, like blah, blah, blah. There's like the red button is kind of similar to the AMC logo. And so like, I'm like, you know what? Like, that's not the craziest thing I've ever heard. Like, I don't want to deal with an overnight position, but like, I bought like 1,000 shares for fun. And so I woke up around like, so GME had popped kind of, oh fuck, this thing's gonna be a pain in the ass to me, isn't it? Um, so this kind of popped like 7:36, which was right around when I was waking up. Then, oh, then this was kind of still up there, like couple minutes later. And so I ended up selling my bullshit 1,000 shares long. And then, so in general, like I was much more short biased on AMC because AMC generally is pretty dilutive. Like it was already apparent that they had been like using the pop to sell shares. I think they did it the prior day. And they had a lot of like, I don't think without a new filing, my understanding was GME can't dilute. They need to do the filing, which they ended up doing yesterday or Friday. Whereas AMC was able to just very easily dilute into this move. The other thing too, was just like the shares on AMC are massive, even though I think the market cap is bigger on GME. But overall, I thought like AMC was definitely an interesting ticker to be playing. And then what's interesting is like AMC couldn't pop too well at all. So I think I did my first short, nothing that big, but I started to short AMC in here. Let me check my photos real quick. Where are those guys hiding? Yep. So you can see that's where I start. Yep. So I did short that pop. So essentially I was doing in AMC the same thing that I was doing in GME. And so I sold, I shorted, and then I added, right? And which aligns with exactly what I did in GME. Then what's interesting, by the way, is this pullback in AMC. This is such a huge pullback. Like if you guys remember the GME chart, like this was a way bigger retracement. Those like to go the extra kind of like $2 here, like this was definitely I was covering and buying into this. And so this I started to kind of trade in and out as well. And now, so let's see. Then AMC, unlike GME, was starting to get pretty close to these highs, which were crazy to begin with. And so I was starting to short into the open. And so let's jump back here. Okay, and this question from Zach. In terms of stock selection, did you think GME was better because it was higher in terms of its historical long-term chart? So what Zach is saying is like, look, long-term GME went to 120, now it's at 80. AMC long-term was way higher. Doesn't that make GME better? Yes, I would say in terms of that, I would say yes. But the thing that scares me about GME and really scared me was the fact that like, and this is actually what kept my trading to be very. I was not, despite the high P&L, I really was not that aggressive in GME. Like nowhere did I ever take monster risk, especially on the short side. And my big worry was, God forbid, Roaring Kitty comes out with something that like the odds were that Roaring Kitty's target was GME. And so I do feel like, yes, that one perspective, it's a better short, but at the same time, like GME is essentially the one with the news on it and the potential catalyst that really could send that to the moon. And like, I always had in the back of my head that like, oh God, like, especially because I'm not glued in, like, if I was still like at Trillium with like a zillion news sources and hyper fast on the keys, like I would have been less scared of that. But like, if he were to tweet something out like, oh my God, the movement's back, I'm long GME, like, that's going limit up. And I know I'm no longer able to like protect myself and get those prints. So like, yes, that made it better, but yeah, I was still kind of scared overall. Is there a time lag in a regulatory process for these filings to be drafted or created, or can corporations just do it almost instantaneously? No worries about being a noob, Bob. This is how we learn. There is a very complicated process as far as when stocks can or cannot dilute. I wouldn't say I'm an expert at it. Some people are far more sophisticated than I am. But there are sources like Dilution Tracker, not that I subscribe to their software, but I know a lot of traders that do, and they're kind of like the experts on parsing these filings. And so a lot depends, like, okay, like when are the earnings? Do they have any available shelves? And so for a lot of companies, like you have a max amount of shares you can issue. A shelf registration essentially says, you know, this is on the shelf for future. Like we can do these shares at a later date. So there is a lot of nuance into knowing the filings, knowing whether these companies have registered. And so if we look at what happened on Friday to GME, and we'll go over that later, but essentially GME released their earnings, and then they also released the ability to file for a future offering. And I'm not super confident on this, but I believe it was because they released those earnings that they were then able to file for that shelf as well. Again, not super confident, but yes, there is there is a whole thing to this. A lot of pros like Short Bear and Jin seem to have a mystic ball as to when these dilutions are about to happen. And it's usually when the stock's when I'm convinced it's gonna go higher. So I'd say like a lot of that you develop a feel, and dilution tracker is really great for this stuff. And so keep in mind, like most of these companies are fairly sophisticated. Like AMC and GME, they know the game by now, especially when their whole survival is based on it. So like, right, these companies still are not making money and have massive debt overhangs. So it's like AMC needs to take advantage. So a lot, like I think what Lucas is really good at is like he is an understanding kind of like the narrative and like the inner workings of like, wow, okay, like this company is cash strapped. Like they do have this shelf. They do have the ability to increase shares. And if they have this availability, when these stocks pop, like these are sophisticated players that know like, hey, like we need to use this liquidity before it retraces and not miss that window. And so, and I also think they've just been using dilution tracker for many years and kind of just have that insight from like, okay, these are what the filings. There's one dude, Ricky Analog. I don't remember what his Twitter handle is, but he's pretty damn good at these filings as well. So there are people out there you can follow, and they know far more than me, but I'd say that's what's going on. And like companies aren't dumb. They don't want to go bankrupt. It's actually their fiduciary duty to use these pops to raise liquidity when they're so indebted. So that's what's going on. And then like that narrative can really just help you kind of, you don't know when it's going to happen exactly, but you definitely know it's coming. Okay. So jumping back to this, AMC had really popped close to those highs. So I reshorted AMC against the highs. GME though was kind of like this pattern here, like we're kind of starting to roll over. And so what I ended up doing was when this starts to roll over, I think right like below 65 or so, like this is almost kind of head and shoulder-esque. So below 65, I shorted, I think like 10 GMEs. And then I was going to just give it prior bar highs, or sorry, I was going to give it probably to the top, like, I don't know, maybe like the top of this range or prior bar highs if we trend. And so let me pull this up a little bit closer. Oh, it's going to mess up when I go to AMC. So the market opens and AMC goes, or sorry, GME goes straight limit down. And so hold that thought. So GME goes straight limit down. And in general, like my base view is that these already topped and put in the high. So let me quickly jump to AMC. Oh, I hate you. Okay. Right. So I'm reshorting in here. And so then what ends up happening is AMC shoots to the limit down after GME. But what doesn't happen is GME doesn't stick the halt. The liquidity gets taken and then it boom immediately shoots to the upper at I think like 1170 or something. And so now like this is where I get this benefit from like trading with different pods and just like having worked with a zillion traders. Like I know what my mind is telling me, but then it's so useful to see what like most people are kind of reacting. And so I felt like, okay, these stocks are probably dead. Then when this shoots to the upper, a lot of people are scared. But in my mind, it's like what happened was a lot of people chased AMC down. They then kind of like when it doesn't halt, they get scared and paper hand it and then launch it to the limit up. Even though like the stock really is just kind of topped and trying to go lower, people got scared. So when this went to the limit up, like again, my base view with these have topped. And so I never want to counter limit up. Like as a general rule, I don't really want to counter limit. But because I thought this big picture top was in and it was people just handing it and being scared, I ended up hitting this upper for like 100,000 shares. And I felt like, okay, like with GME downside, like, and all these kind of breaking, like, I felt that the odds that I was going to end up needing to take the highs was like, I didn't think this was going to gap anywhere stupid on me. And I felt like pretty confident, like, okay, this was just, flow that was panicking, even though like it really wanted lower. And so GME unhalts and it just is steadily collapsing. And so then when AMC gaps down and kind of confirmed my view that, oh my God, it was just people paper handing, I even add here and I'm then just giving prior bar highs. And so what I did was I trailed both AMC and GME to prior bar highs. Like, yes, I'm probably covering some on the way down. Like if I were to look at these, let me see. You're going to see, yeah, I was. So you're going to see these little blue dots. So yes, I'm definitely covering some, but for the most part, I'm trying to hold my position to prior bar highs. And so what ends up happening is AMC and GME make a really nice leg, right? Like this went from 12 to 9. That's a 25% drop. And pop to GME. All right. And so GME also makes a nice move. And so then I end up flipping long in both of these tickers. And so this was a little weird because this kind of wicked. I don't remember whether it wicked before we broke highs or not. I don't remember. It's going to be hard. I don't want to pause to check nuances, but so pretty much once this turned in both AMC and GME, it's possible that I might have gotten slightly long, then hit out. But like once this turn was kind of in, for those that were around in 2021, so I often talk about like kind of like the pendulum, and especially in these stocks, what happened is they'll swing really, really far in one direction, then go snapping back in the other. And especially these, like because there's so much flow and so much retail in these, like I do find that GME is the best like pendulum stock of all time. So you'll remember in like late January 21, there were times where this stock would go euphoric, it would crack, then it would go limit down, limit down, limit down, limit down. You would be able to buy that turn and it would just make these amazing bounces. Like it would go just so much further in each direction than you ever expected. And especially the bounce plays were like incredible. So I was really, really prepared to go ham on some of these bounce plays. And the beauty of the long is, of course, like you can't get like epic wrecked the same way you can get a short. Even if it halts against you, you can only lose so much on a downside halt versus the upside, which is far scarier. So in both AMC and GME, and especially as this goes up there, I bought a pretty good chunk, being willing to give this to prior bar lows. AMC was pretty much a little bit of a better mover, I think, down here. And so then I'm doing the same thing, holding prior bar highs and giving this holding prior bar lows and giving this to around there. Same for AMC. And so one of the really common things you'll see is something makes a big leg, and this is, somewhat downward capitulatory. Then once we've done this counter leg, once we're sitting through here, like these Bollinger Bands are contracting. That's a sign that volatility is contracting. When volatility is contracting, I generally want to be fairly hands-off. Like this all for me is a sign that we're now entering no man's land. As long as we're kind of in this range, like I really don't want to be trading that much. And like it was funny because like everybody on my call recognized that, but it takes like a lot of emotional discipline to say like, look, this is no man's land. Like I need to be emotionally okay that this might make a move without me. Or I might just need to wait for the lows. Like for me, I was only going to get meaningfully short again if we broke 45. And what ends up happening is I'm able to save just like a lot of losses in here. And so if you look at my execs, which I'll pull up in a sec, if you look at my execs, I was definitely taking some trades. Like I'm kind of shorting these pops, covering down here and whatever. Let me see. Yeah, so this is the whole no man's land. So I am doing small little trades, you know, little long, little short, whatever. And like I am probably taking like, you know, there's small size in here. But again, my whole gripe with the execs is people can't really see my size. Like whatever I'm doing in here was like way, I'm doing it with 2,000 shares rather than 10 or 15,000 or whatever I was short. And so where I started to get really interested, so let's pause on GME, is GME is holding mid-range and oops, God, I hate this thing. It's just so sensitive. There we go. And so while GME is holding up mid-range during all this AMC is really starting to be relatively weak and going down towards these lows. So like I said, the range I want is I want to see the range of the open or the day or whatever crack. And so the lows were 880 or so, and we cracked them here. And so even keep in mind, like you can even game plan into these moves. Like, are we going to short this low? Is this a level? What do we think? What sizing are we going to do? And so the people I was trading with, they did a really good job of like proactively discussing this. And so there is one other really one guy that's pretty much, you know, my level trader, really experienced 8-figure trader. And we both had the same view that like, look, I'm definitely adding size there. But I think I was the first to say this really like, look, I'm adding size here, but I don't think it's going to be clean, because I think what happens in these stocks is you get so many people that kind of just like chase. And then like if it like you get so many people that chase and wick it down, you know, then if it doesn't immediately go, they like kind of paper hands and cover. So I'm like, I don't think it's going to be clean, but I think this is going to, you know, I think you need to add on that crack and yada. And so what was interesting is on the call, like we break, like the other kind of top trader and we hit a chunk of size here. And so if you're smaller, I don't think there's anything wrong with hitting here. Then let me zoom in a little bit. I don't think like this is a pretty nice roll overall. Like I don't think there's anything wrong with hitting the 880s. Then if we get and we go limit down, which feels really nice, like that's what you want to see. I don't think there's anything wrong with then like covering and stopping out at 881, 882, or even above 9. But then once this starts to roll over again, like my whole belief was that it was going to be a lot of people kind of just paper handing it that chased. And you gotta be, there's nothing wrong with covering, but you gotta be open to then re-shorting and adding as we do roll over. Because this is the level. You need to be in it to win it in a stock like this when the daily's so A+. And so then you might ask Lance, like if you're hitting here, what stop are you gonna give? So actually let me add a couple more details. Part of why I thought this wasn't going to be that clean is because we were really kind of coming from 950. What I would have really wanted to see is all of this price action in here. Like this is sitting on $9. This is sitting on 950. I would have wanted all this price action to be sitting against these lows. If this area was against 880, if this area was sitting against 880, I think that break of 880 would have been way cleaner. But what happens is you have a lot of people that short 950 and they're like, oh my God, I want to take some covers down there because it's such a big quick move to that. And so this wasn't so great of a setup. And that's why I anticipated this being a little bit choppier and likely to shake people out. If this was like a VVOS, super tight, super amazing setup, I don't think this would have shaken people out. And it would have just, you know, I would just want to go nuts on that break. But because it wasn't so great, I was anticipating the shakiness. And so then what ends up happening is as this kind of fakes out a little bit, like, you know, I'm probably going to give to 950 or even like 960-ish and kind of just see how I feel when it gets there. But so what I saw, and that's the benefit of being on some of these calls, and like, I ran an office, so I've seen this play out so many times. And you just, it's like, okay, a lot of the younger guys kind of chase, then they get a little bit shaken out in here. And, you can just hear on the call, like, ah, shit, I stopped out. Ah, shit, I stopped out. And I'm like, well, you kind of just see what's causing this whole move. And it's like, yeah, I kind of expect it to be shaky. The other guy's like, yeah, I don't know. I'm just holding. I expect it to be shaky. Then it rolls over. Then they're like, oh man, I can't believe I stopped out. And again, those nuances matter because if you can, I don't mind shorting and covering as long as you just get back in. And the thing is, especially if you're smaller size, that might be the totally optimal strategy. Short 879, cover 881, just get back in. If you have larger size, you can't so easily do that. And so then this stock just kind of, so one thing with prior bar highs, like I'm not necessarily covering a ton, if any here, just because this move isn't so overextended or big or anything. Yeah, like I really want to especially use prior bar highs when we've really capitulated or made a big leg. So I think I was probably taking some off. Like, I think I cover some, I reshort some. Let's see what the yeah. So this is yeah. So yeah, I'm taking some covers. I'm reshorting. Yeah, so that's right. And oh boy, this chart is killing me. Oh God, I lost it. I'm sorry, guys. Is this it? Yeah, this is it. It's just so sensitive for some reason. So keep in mind, this does this. And now by the time we get to 6, that's like a pretty damn big move. So one other thing I'll touch as like a key is I generally use like symmetry for like a base case. So this level was 880 that we broke, and we were, let's call it like a $3 range. Call it like, off the open kind of $12 to 9-ish. That's a $3 range. So in general, right, 9 to 12, when this breaks, like my base case heuristic is I'm looking for a move to 6. So when this got to 6, like I was pretty okay. That's just a damn big move at that point, especially on the daily. So I was taking off a good chunk into there and even starting to think long if this starts to melt. So let me jump back to any questions there before I now say the GME equivalent. Okay. Oh, wait, I have stuff in the chat. Hold on. Okay. Curious if you think that the dynamic into the open was similar to the dynamic into the open on the prior breakout day, if option sellers drove this limit down. I don't really have any super strong view on that. What I will say though is like when price is skipping so much, it does make it really hard for the hedging of this stock. And so like, especially with halts, right? If something halts at like $70 limit down, then it opens 50. Like all those deltas for people that are short options moved so much with zero ability to kind of delta hedge it. So I don't feel so strong, but it's probably not a non-zero factor. I guess the main thing is I don't know. So Bob, basically the first limit up after a sequence of limit downs. Yes. So yes, that pattern can be super powerful, especially when these things are really extended. Like again, like the pendulum, or sometimes I call it the rubber band. Like that rubber band can be stretched really, really, really far. There's no way to tell how far that rubber band will stretch, but once it starts going that other direction, boy, oh boy, I want to be with it. And so we've seen like the limit band play in so many tickers, like Nokia back in 2020, like PHUN. So this is a pretty common trade where when stuff goes consecutively limit down really, really far, you tend to get that pendulum effect. A lot of people are getting stopped out. A lot of people are getting margined out. So yes, and that's also the power of the right side of the V is I don't need to know how far that rubber band's going to stretch. I'm just going to be in for the turn. Other question from Zach on SMCI. You mentioned that the length of the consolidation gave you greater confidence that the move would follow through. How did AMC consolidation affect? So that's a really good question. the consolidation seemed somewhat short. I would say yes to all of that. So length of consolidation is really important to me, especially given the size of the initial move. In VVOS, we had a really, really large move, but that was like a very large first leg. But then we had all day consolidation, beautiful counter move. On SMCI, Zach's referencing the exhaustion day where we collapsed, consolidated, and kind of bouncy balled all day, then broke. And again, I'd say 1 to 2 p.m. is kind of when this tends to happen. So do I view this as a little bit short? Yes, I do. Like, I view the quality of this consolidation as a little bit stronger than I'd want. Like, again, I'd want this down by 880. I'd want all of this, kind of much lower and much weaker than it is. And yes, in an ideal world, I'd want this much longer. So I think a good segue is then comparing this to the GME. Okay. Oh man, this thing. Okay, so GME has a lot of the same things where it's like, I wish this consolidation was lower on this $45, but really AMC broke around here. And so GME did get an extra hour. And so I wasn't touching it too much in here, but I will say because AMC was melting so good and we had this pretty tight range, once we started to break like 48, I probably added about 5 here that I was willing to give to kind of above this range at around like 50. But I really wanted that true break of 45. And so because GME had consolidated an extra hour, and because the daily chart, I would argue, is even better, number 2, and because AMC was leading and melting, all 3 of those factors made me even more confident on this GME break at 45. So when we halted limit down and then reopened, like I definitely way added big. I might have added like 10, 15, 20,000 on this 45 break. And so then let's see. So this was the type of thing where, yes, because we kind of started from 50, I view even this move to 42 as like pretty big. So I was starting to cover into this move and definitely cover more aggressively on that turn. I think I re-added a little. Then definitely as we started going to this 36, this was where I started to flip long. Not so much that I love the AMC yet, but like, again, these really can snap back way surprising. And that's a pretty damn big move. And so if we take this, right, if 45 and then we kind of open 65, 20 points. So if that went to 25, I would have just absolutely loved it, gone nuts for that long. Nevertheless, I was still starting to buy a little bit on the long into like 36, 37. And I had some really big bids in the high 30s, because if that really went and kept flushing, I would have just loved this play. Another reason for loving this play is just because like we spend so much time consolidating up at 50. Like if this thing then just gets crushed like 50% in like a straight capitulatory line, that's going to make for really good trading. And so then I end up buying the break of prior bar highs, and I do a decent long here. Not that this chart was so amazing, like it really didn't go so capitulatory, but again, just like, okay, this was like a pretty big trend. These pendulums do tend to like snap pretty far back. So I did buy some here, and I caught just prior bar lows and caught this leg. Now the other thing for AMC. Okay. So AMC had this, AMC had almost like this 650, like this $6 by 650 range. So we're consolidating. GME starts to perk up and do its little bounce. And so this is where I want to be long above 650. We end up halting right before 650, but then post that halt, like I was essentially bid into this 650 or so, trying to catch this move this counter move, which I did. And so if we were to look at my execs, like essentially I would like, okay, like, so let me even zoom out big picture for this. I really try to always look at an in-play chart and just put it into legs. And the way I look at this is, okay, we had big down leg. This is a consolidation. We had big down leg, or sorry, let me even restart. This is the big down leg. That's the counter move. This is a consolidation after. This is the big down leg. We haven't had any counter move yet. So when we break that 650, that's me trying to catch that counter leg being with the trend. And so we make that move, then we turn, and now I assume we're going to have consolidation again. So all through here, I'm not touching it anymore, right? And so people are like, oh my God, how do you not lose, or how do you avoid the paper cuts? It's because if we really deduce what I did, right? I was short and caught main leg. I caught counter leg, went hands off in no man's land. Again, you see execs, but it wasn't for any meaningful size. We break that range after an okay consolidation. So I short, I catch that leg then turns and I'm long for the counter leg. Then we're in no man's land consolidating and I'm hands off, right? And because so many of the younger traders, they emotionally can't accept missing some of these moves. So they end up churning in here. Now, if we look at GME, right? I was short, catch the main leg, long, catch the counter leg. We consolidated no man's land. I do hit a little, but the main ad is the break at lows to catch the short, catch the counter leg. And then for the rest of this, I'm not really doing much because it's just mid-range. Like, yeah, I'm sure I can like do some potential long above 45 and catch a few points, but like, I'm really trying to just capture the meat of the move. So any questions for this? This was kind of the big day. This was the day where I did 1.2. Oh, the other thing, by the way, is so once these cracked, right, like once you make a move like this where you go 70 to 45, I'm like, okay, these are the odds that these are done are super high, and implied vol was still through the roof. So around this range, that's when I started selling the calls. I sold some weeklies, and even some Junes. Like some Junes were just super expensive. And those ended up just dying by the end of the week. But yeah, what can I answer on this day? Because that was a lot of info.
I know you talked about it earlier, about picking a stop being much more of an art than a science. And I'm curious, when you added on those midday breakdowns, because you said you had a starter, and then like this GME example, you added at 45 once it broke the lows.
Yep.
Where are you still risking over that 50 level and accepting that it's a higher win rate play, or
Yeah.
are you moving your stop lower?
Yep. So especially because to Zach's point, like I don't feel that this consolidation, like again, I just wish all of this was shifted much lower, right? Because if this was shifted lower, then that range high is essentially the same as the breakdown level. So that consolidation not being so low on this range does make it a little bit harder. And I guess the one thing I would add is because these daily charts are so A++, the really big mistake I would make, or and I said that wrong. The really big mistake I could make is to not be involved on the crack. Like when this breaks the lows after a multi-hour consolidation, if that's going to break the lows, then go back up and stop me out at 50, like, yeah, that's a lot of points to lose, but so be it. Like these daily charts are so good that like I need to give it the benefit of the doubt. And I think that's where people mess up. Like the whole point of no man's land isn't that you can't make money in here. Like obviously you can. But what so often happens is people just chop themselves up, and then they end up chopping themselves up, that then when this does break, they don't have the confidence or size when it's like, no. Like I want to trade 1x, 1x, 1x in here. Then when this breaks, I want to have like 5x. I don't want to do like 5x, 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 get chopped up, then trade 1x here. But that's so often what happens for people. So yes, like given the daily chart, I really wanted to be in it to win it. But I was gonna, you know, and part depends on the box. So like maybe I'd have taken off some above 45, but definitely a chunk I was gonna give to 50 for those same reasons. And so it's for these reasons that I would argue that like no setup anywhere was so amazing. Like I know I did well trading this, but I actually don't think any of these were like an A plus plus setup. Like I'll take like a VVOS setup. Not that I made it like anything super meaningful compared to this, but like the quality of that setup is way better than these. Like nowhere did we go mega like capitulatory super puke. Never did any consolidation be so perfect. So like I would say the opportunity these presented were like, man, it could have been so much better. Like not that these weren't good, but it really like if this consolidated how I had been describing, I wouldn't mind being short like 50,000 GMEs or something. You know, so I really did not short that much size on either of these because of those qualitative factors. Like I don't think anything was there was not a single spot where I'm like, oh my God, that was the go all in. Like it's not all in, but like, oh my God, those are aces. So I do think a lot of these had cons. Yeah.
I'm curious about longs. I feel like I struggle with those because a lot of the signals that typically would use like prior bar breaks are like really close to limit levels or something like that. Like, how do you think about kind of like the signal to get long on these after when these legs are kind of going? Do you think it's
Um,
fine to just buy limit?
I think buying the limit is totally fine. And I also think just like, I don't mind buying if the prior bar break is at like 45.50 and the limit is 46.20. In general, I'm just still going to buy the prior bar break because like, I don't want to not get stock if we get into that limit up and I can't get all the stock I want. Um, no, again, I don't think any of these flush outs were so A plus, but yeah, I'm generally still just trusting the system and like maybe I'm trying to add if into the halt, but yeah, I don't mind buying that break at all. Because a lot of times you kind of do go limit up and then everyone is trying to get stock and you know you're not going to get it. The other thing too, Zach, with these longs, again, this didn't really go as far as I wanted, but the beauty to the downside is that there's a lower bound, right? Like if I were to ask you if this halted at 35, then opened at 20, like you'd probably want a lot of shares there, like I'd assume, right? And so I was explaining this to some of the other guys on the call where they were kind of hesitant. And it's like, look, if I want a zillion shares at 20, I probably want a good amount of shares at 28. I probably want an okay amount of shares at 32, which probably means I want like at least a little bit if we turn here. Obviously, the further we go, the better. Like if we just capitulated down to like 20, the probability of a bounce at that point, like a really big bounce, is probably near 100%. And the risk reward is just so skewed. And so while this wasn't so great, I at least wanted some. And my comfortability doing that is so much better to the downside because you can't just get epic hose. Like as long as it's moving fast and capitulatory, it's generally getting better on those. And again, like it helps so much that like GME is probably like the best, you know, pendulum bouncer in each direction ever seen, at least that I can think of.
So it's more like a scale rather than like an all or nothing kind
Yep,
of thing.
yep. Or you wait for the turn, but for me, I wasn't going to be able to get all the size I would want had that gone much further. And I think it's also worth just looking back. Like I was thinking about the 2021 trading and like, okay, what were the big lessons? My biggest regret in my 2021 trading was that on some of those longs, I just wasn't going like stupid ape shit nuts long. Like even though those were some of my best trades ever, like some of those were so beautiful and just so asymmetric that I should have gone even way more. So not that this was so great of a play, but like my pretty much my one goal that day was like if this pukes to the downside, like Like Lance, you're not allowed to puss out. So really I wanted, I was going to be overly involved and overly aggressive on any like form of capitulation on the downside, just because like, I mean, think about this, by the way, like, so this went to 36 and that bounced 10 points. Like that's a pretty damn big bounce. Like there's no way I'm losing 10 points on that. So I think these things are pretty in your favor, like wildly in your favor in a stock like this. Okay, when do I decide to size up the most? So on these, definitely my biggest size I got was probably here. Not because it was so good, but just because I'm so much more comfortable on the long side than God forbid this does something stupid somewhere. Like pre-market, I'm not going to get crazy size because you know the liquidity and everything. Things can always get weird in these stocks with halts. So I never was going, there was no setup where I was going nuts on the short side. Well, actually, I mean, these were okay. If this was a tighter consolidation, I would have gotten my most size there. Instead, it probably was on this long, even though it was kind of mediocre. But if this ended up puking to 25, I would have been comfortable with 100,000 plus GMEs. So really, like most of my size was fairly even. Nothing was so crazy to me. Like I would say all of these opportunities were pretty similar. Like the one thing that I would say you probably can't miss is like you can't miss this break to lows in AMC or GME. Like when this cracks, consolidates, then makes that kind of afternoon leg, you kind of just need to be in it. Like that's the one thing is there were two things I wouldn't forgive myself, and that was like if these mega capitulate downside, I need to be insanely long, and if they have a nice midday consolidation, then break to lows, like I need to at least be involved. One other question, do institutional traders have live info about the short interest that is currently in the stock? That way we can tell motivations of people. Retail has to wait 2 weeks and the data is only useful. So I would say there are some pro sources for real-time short interest, or at least semi-real-time. Like I think I don't remember the name of it anymore, but there's something that I think gets you an estimate every single day. But at the end of the day, like I don't overly cue in on some of that stuff. Like at the end of the day, like 90% of my rationale for all of this is kind of just the chart. Yes, that one Roaring Kitty long on the Sunday night is experience based. Yeah, thank you. S3 Partners is who I was thinking. Yeah, I think they do the daily estimated short interest. So like 90% of like never have I mentioned too much of the short interest anywhere. A lot of it is just me really trading the chart and the nuances of the chart. That's always like the bulk of my edge and my trading. So I'm going to just quickly go into the next day. So things kind of gapped up. So actually what happened was after hours, Roaring Kitty had done that one tweet about how there was some tweet that actually mentioned GameStop. So we had really popped after hours in GameStop. And so I felt like, oh my God, like Roaring Kitty finally mentions GameStop and like this thing like barely goes up and like we still hold way below the $80 highs. So I saw that at night and I'm like, oh my God, this stock is likely so dead. I don't want to do an overnight, but I think this stock's dead. So I woke up super early on this day and pretty much I shorted some pre-market. And then once we kind of, yeah, I was shorting pre-market on and covering on some of these roles. But my big picture thought was like, oh my God, like one AMC, like now that we know he's talking about GME, like AMC is totally screwed now. Like this dilutive piece of crap is going to get wrecked. All the people that theorize he could be long AMC, that's now gone. AMC is wrecked. And then I thought, oh my God, even with this catalyst now, like we know it's GME and it's still not really popping. So I was short biased this day. Nothing crazy, but I did hold just a core into this open and caught this leg. But I think AMC is even more interesting. think it was here. So AMC did like a fairly decent, oh God, this is so annoying. So AMC did a fairly decent pop into the open with GME. So this, like, I was just so not scared of AMC at this point. Like my biggest scare with either of these stocks is, oh my God, if GME, if Roaring Kitty comes out saying I'm long these, I am just going to get so hosed because I'm just not quick enough in watching a zillion screens anymore. So that was my big fear short GME. That was my big fear short AMC. So now he comes out and includes GME in a video. So I'm just like, wow, like this AMC is just, it's just done for. And so especially this popping like 850 to 9, which isn't far from the prior day highs, like I was willing to get very, very aggressive on this. And so I'm short kind of the whole morning. I'm still watching this. I'm covering into this. I'm shorting some pops. Then right here is where AMC announced they did what? They paid off some debt using just the stock issuance. Like it wasn't like a true secondary offering, but essentially they were issuing shares to pay off a lot of their debt. And so first of all, the size of that share issuance was massive. Like I think in dollar value, it was equivalent to about 20% of the market cap. That is a really, really, really huge issuance, which also made me think like, oh my God, it is so game over for this stock. And so if you're like if you're a very fast QM pro dude, like an amazing short was just like seeing that headline and just whaling the shit out of this. There was so much liquidity. I can't see the volume because my Zoom's covering, but so I was short into this headline, able to short more, and then I was just covering chunks because yeah, I was just covering chunks on there. So then we kind of paused by these lows at 6. So then I ended up kind of just riding a short into the open on AMC as well. That I think is kind of one of the bigger things I wanted to point out. And I also want to say like, oh, the same way I shorted GME calls, those AMC calls, even on this day, once it collapsed, were still so expensive. Like you were able to sell AMC weeklies, like the 1250s for like, I don't know, like over a dollar, which was crazy to me. Like the, the stock's down at like 7, the top is very likely in, and these 12s were still going for super, super big. Then what was wild is that next day, the day we were just looking at, they've now done an offering. It's clear to me that Roaring Kitty's, it's GameStop, not AMC. Those calls were still going for really high prices. So that was nice. And this held prior bar highs the whole time. We're like at this point, I don't know if I'd really be short this anymore just because it's pulled back so much. But yeah, that's kind of the gist. So one other question, do you always look for some sort of catalyst versus specific daily levels, possible bag holders? A lot of times with a catalyst, like I won't necessarily put too much weight on specific levels because the catalyst has the potential to just overcome anything. Like if Roaring Kitty came out and said, "Hey, I'm long GME," that one morning, all I'm thinking is, "Oh my God, this could be sent anywhere." It's really, really hard to, I don't want to overweight levels in the face of fresh news catalysts. So I might be conscious of them and aware of them, but in general, like I really just want to be with the trend on the news or definitely not on the other side of the news and then listen to the technicals of the intraday chart. Because a lot of levels will just be totally steamrolled during catalysts, but that's a good question. Okay. What else? What questions based on that? Because I mean, I think I hit the main points I wanted to hit. Oh, then I guess there's the GME where they did that's kind of maybe the last thing I'll touch. Oh God. Where was this? Was this here? Yeah, this I'm pretty certain this was here. So GME then comes out with earnings along with their huge shelf that, hey, we're registering that we can do some massive offering. When that news comes out, like most news I kind of treat as fairly binary where it's like, okay, this is news. I want to generally be with the trend. Again, simple systems, prior bar highs works really well here. Like you can short this and you make a like really nice amount of points. And again, with them filing for those shares, like this is just so likely game over for this as well. Oh, am I on the wrong day? 5/16. What day is this?
I'm pretty sure it was the day before. Yeah.
What
I
day?
don't think so. That look.
Okay, maybe not then. I
Yeah,
thought.
I don't think I see anything this other day.
All right,
Cause
disregard.
no problem. Yeah, I think it was 5/17 because yeah, that was Friday. Yeah, I think it was Friday. I think it was this. Because it must have been like a 7/15 or something, is my guess. I don't know. Yeah, it's got to be it. No, it definitely
You're right.
definitely
It's definitely 5/17. I'm
yeah,
looking at
because I also remember looking at this and then being like, oh wow, that hold prior bar highs. So I saw an interesting tweet. Someone bought 100 calls, $100 calls, GME valued at 1.2 million for June 21st. Will that have any influence whatsoever? I don't think so. The other thing to keep in mind is like the real question is, did the whale buy 1.2 million of those calls, or is it possible that someone sold those calls and a market maker took the other side and was all delta hedged? I don't know. But I try not to read into too much of that just because like you don't even necessarily know what side the actual trade was on. Like there's been times where I've been on the selling side of options for size, and then you see it like get picked up by people and you're like, no, that's like wow, someone's super bullish because I sold a shit ton of options when it's like, no, I'm bearish. It's like, and like keep in mind in the options market, like everything's just gonna like you can pretty much get any size you want in the middle of the spread. And it's just market makers that are then just hedging you out. So I don't read into that stuff. And I think I mean, maybe I'll end up with egg on my face, but I think it's pretty safe to say that these stocks are just totally game over. Like we're not breaking those $80 and 12, whatever it were dollar highs, nor do I even think we're breaking, the highs on the daily. Like I don't even think we're getting above 65 and whatever the corresponding price is. I mean, it's game over. Like both of them have issued a shit ton of stock or the ability to issue a shit ton of stock. Most people were just totally sandbagged, right? Like any single person that bought options, you were just totally game over it, right? If you bought weeklies, you just took a massive zero. So I think probably a lot of apes blew up. I think a lot of the hype is gone. I think a lot of people are just like, wow, screw you, Roaring Kitty, you bagged us. And I suspect if like, I think Roaring Kitty to some degree is somewhat an idiot for various reasons. Like I think his whole thesis to begin with, it was the dumbest thing on earth. But I don't think he's so much of an idiot where like I'm fairly confident he was probably buying the shit out of those call options, the couple weeks ago. And I'm fairly confident he at least has some idea of euphoria and probably was taking some sales. I'm sure we'll never know. But he easily could have, if he's not totally dumb, he could have easily made 10, 20, 50 million plus doing what he did. And yeah, that definitely is a lot of money to then go back making memes for the next 3 years.
Just one thing that's interesting. Maybe it's just a coincidence, but the Zach Morris court case was finalized, and it just basically said that tweets can't be prosecuted if you make money on stocks.
Yeah, no, I saw that. I mean, who knows? Like that was just like a Texas court. That ruling definitely surprised the hell out of me, and I think a lot of people like Matt Levine and everything. But my read of that is okay, it was just the Texas court. This whole thing might be appealed anyways. I personally still wouldn't be doing what some of these guys are doing. It's I don't know, but I guess if you're not that Roaring Kitty's a scammer pumper, maybe to some degree, but definitely the Zach Morris people are. And would I be doing that? No. Even with that ruling, why ask for trouble? So one other thing that also was in my mind, yes, my fear was that Roaring Kitty would tweet something pretty less subtle. But at the same time, like if you were to ask me, like, why do I think Roaring Kitty did all these memes and videos? My base case guess is 100% that he did it because he was scared of the legal ramifications. Not that he got in trouble, not that what he did was illegal, but I think most people getting pulled in front of Congress and facing charges and stuff, I would assume that's a fairly traumatic experience. So my best guess is all of this occurred because exactly that reason, Zach, because he just didn't want to. It's a lot harder to be like, hey man, your memes were moving the market. It's like, dude, you're getting a little ridiculous at that point. So that's I think was probably a factor for him mentally. Would I look for any specific criteria / chart pattern to try to identify the beginning of a move and have the conviction to size in heavy on the long side? Yeah, I mean, totally. Yes, but I would say this didn't really unfold in any way that left me so convicted on the long side. Like the way this unfolded on that daily chart break on 5-9, I didn't particularly love. So yeah, but in general, on just pure technical analysis, I think this wedge was pretty damn awesome. The analogy I gave in my other video is sometimes you have aces, but the way that hand unfolds, you get a flop and you're like, oh man, these aces aren't so good anymore. And like this setup had monster potential, but the way it unfolded intraday and everything else ended up not being so great in my opinion. And so like, yeah, I don't think anything was so A+++, like go nuts. Like I still think the best trade this year was SMCI 0DTE puts. I think that was a better trade than any of this stuff by many magnitudes. But the other thing I'll say, by the way, with a lot of this stuff is keep in mind that every trade I did was pretty much with the trend. And with the trend, that includes being with the counter trend, right? So when Roaring Kitty came out with his news, which I view as being news, I was long with the stock into a capitulation. Even when I was trading the capitulations, I'm generally waiting for the turn or shorting after a crack so that I always have a stop. And I'm always trying to be with that counter trend. So I'm short as the stock is melting. We then capitulate and turn. I'm getting long with the counter trend. So a lot of what I was doing was always trying to really just ride the waves. Like imagine this pendulum where it's got these really, really big waves. I'm trying to just avoid the BS or around like in the middle, but just really ride the trend in between. Let's see. I don't know you have time after your review, but I'd like you to get your opinion on FFIE and how you have traded it. I want to thank you. Oh, I'm cut off. I want to thank you, Lucas, and I'd assume Nathan, your hidden gems. I had my first 100K week and see all the improvements. Wow, congratulations. That is big money. Congratulations on that, and thank you for the kind words. I love hearing that it helps people. Because as sad as it is, I think for the majority, like most people won't, trading's really hard, especially just purely learning through online sources. So I think most people, it might not move the needle, but I think if you're on the cusp, it at least gives you the right path and a lot of the right concepts. So I love hearing that. Yeah, so I mean, I'm happy to go over FFIE. Does anyone have anything? I honestly think like AMC and GME was pretty exhaustive at this point. Like, I don't think I missed anything. I'm happy to answer any further questions. Otherwise, let's hit FFIE. Any final questions before FFIE? All right. And so, by the way, guys, like I said, everyone's going to get, oh yeah, good point. Yeah, why not selling puts in GME at any point? So let's start with the point that I was asked by one person. Why am I shorting the equity rather than buying puts? The short answer to why I'm not buying puts is because like on these moves, like the IV was just so insanely jacked where it's like you would look at like the $40 weekly put and it would be like $10. So even if you caught this whole move, like you only made, 1-to-1 risk reward when these things can like be more resilient. Think about how long like GME held up. So I didn't like the IV was just so insanely huge where I definitely don't want to buy the puts. So why not sell the puts? Selling the puts is actually kind of more tempting to me than buying them. So there was definitely times where I would be short equity and I would sell puts against that stock. And then if we bounced or those kind of decayed, I would close out some of those puts. So I would definitely do some of that. So what about buying spreads? Doesn't that mitigate a lot of the cost of buying high IV? Yes, like you definitely can do stuff like that. But the issue is even with spreads, like you're going to be paying most of that IV and time on the ones that are more out of the money. So like I don't think I was still like so convinced by anything, honestly. Like for the most part, I think kind of just the stock had the most meat on the bone because of that. But then the original question was selling them. So like I'm not opposed to selling them, but my one fear with selling calls in these is like, or sorry, God, selling puts in these is I do have the fear that like one, they could do some massive news or offering on the downside because like look, these shouldn't like this, the fair value of this stock is probably 10. So it is kind of scary to sell a put knowing that like any put that I sold, I would have ended up getting hosed on because it did end up going to $20. Not that I wanted to bet that it was going to go to 20, but it did. And AMC obviously got super smoked. So because the fair value is actually just so far away, like unless I'm doing it against stock, unless I'm short stock and selling a put against it, I didn't really love that either. Like I do think, unlike in many of the other opportunities we've seen this year, doing just the equity offered the best expected value overall. So yeah, and like the other thing too with like some of like the spreads and stuff is like once you start to overcomplicate the trading, I don't know. A lot of that stuff where I've tried to do complicated, wacky things, it never works out as well for me, and I end up kind of just kicking myself. And like weird things can happen where it's like, okay, my way, I don't know. Yeah, I've done times where I've gotten cute and just hasn't worked. What would I look for GME and AMC for the next few weeks? Do you still think there will be ops? That's a good question. That's a good question. I mean, at this point, what I would say is I don't want to be short GME anymore. Just because that's just too far of a retracement, going essentially from 80 to 20, like I just don't want to be short that anymore. I don't feel that it's so convincing. Even AMC, I don't mind as much being short because these are kind of tighter bars, but I don't love it either. Like we're kind of pulling into the moving average. My base case assumption is that I'm going to be fairly hands off. Like things I will look for, if there is a pop, I'm probably very, very open to selling more calls, especially because like the cat's out of the bag at this point. Like even if Roaring Kitty says, "Oh my God, I got long GameStop," like I just don't think these stocks are going wild after all this. Everyone just got hosed. So my base case assumption is I probably don't trade the equity on this. I do think if there's any pop, I'll probably sell calls. But again, just given the amount of dilution that occurred, I don't see these popping that much. So the odds are I probably will be doing next to nothing. But who knows? We'll see. Obviously, what could change my mind is if there's some type of news or whatever. But overall, I would guess 80% chance, probably 60% chance I don't do anything, maybe sell calls, 80% chance I don't touch the equity. Other question, do I make any trading decisions based on the Bollinger Bands? I do not treat them as levels. When I do my course, I'll be getting into the nitty gritty of the many different ways I use Bollinger Bands, but I do not treat them as specific levels, no. Like for overextension, I'll want to see something overextended relative to the Bollinger Band and the moving average. But I'm never just like, oh my God, I'm long because we broke above the Bollinger Band. So like they'll be a measure of different things, but they're not a level that I'm trading off of. So no direct trading decisions, only indirect influence. And with that, let's see if we can hammer out some FFIE. Okay. So let's see this stock. So the thing to keep in mind is this daily alone is important to bring up. This stock is beaten down to shit. It was way higher than this 130, then 85, and now it was in the single digits. So let's zoom in. So this stock had a big day one. Oh God, it's so funny. Like you look at this stuff. So the big debate was like whether to overnight this. Well, actually, let's just jump into that. So this was 5-14. 5- this right? Yeah. So oh God. Okay, so this stock kind of did some crap off the open. We then kind of consolidate during the day. So first of all, like this was doing epic volume. It's super, super beaten down, huge short interest. So first of all, I think like I'm probably not looking at it before it does this move. If you do see this though, I do think this buy is like, you can just go so epic nuts on this buy because, you're risking a couple pennies, potentially even tenths of pennies, and this could really go in this market. We do have a pretty big capitulation. So a lot of people were asking me, do I want to overnight this into the close? Because we had this intraday capitulation and because GME and AMC are dying, I was too scared to overnight this. But what I would say, and this did actually pull back pretty considerably after the close. And so my thing was like, I only want to be long this if it breaks above 35 cents because it had capitulated. So the close is 28 cents. It pulled back a fair amount. It capitulated. So I don't want to overnight this because we're under 35 cents. We're even weaker into the close. That being said, late in the day, in the after hours, we do end up breaking 35 cents. So if I'm not involved, that's where I want to potentially buy. I think this was worth the long after hours. I did not do it, truth be told. I don't think I even saw it after hours doing that, just because I don't think I was just paying attention, honestly. Would this also be considered an A+ consolidation at the top 1/3 of the range? So, I guess my question, Bob, is it's not clear to me whether you're talking about this one or this one, but I would say both of these kind of pulled back more than I would have wanted to see. Like I really want to see something, the 10 to 11 one. Okay, got it. So, oh, don't do this to me. Oh God. I hate you, Thinkorswim. Ugh. So like in an ideal so this went 10 to 18 cents. That's 8-cent difference. This pulled back 6 of the 8 cents, right? So in an ideal world, like this to me isn't that it's great of a consolidation. It does save itself by kind of getting really tight in here. But no, I would have wanted to see this not pull back past 14 cents. So if this kind of went down there, then we start to get tighter and tighter and tighter. And having this up above 16 cents, that would be an A+ consolidation to me. So no, I don't love seeing this pull back like 75% of the way. Like this is just too steep. too steep, and like the steepness of that pullback worries me. Then we get to lows, then we get to lows again. So like we've just been rolling over too many times. I do like that we make relative higher highs here, relative higher lows, like relative higher highs, relative higher lows. So I do like some aspects, but like it's just too, like if we look at a trampoline, like this trampoline just sagged way too close to the ground. I don't, I want this trampoline that absorbs everything, then just launches me. I don't want like the trampoline where I'm about to like break my legs. That's actually a new analogy I might use more in the future. I kind of like that one. So I do think this 35 was worth it. I did not do it. Then we kind of, we're going nuts over here, guys. Oh boy. Okay, so I swear that's not even me. We've got a ghost. Okay, so we do gap up pre-market. What was interesting is that this does still have options on it, and the options, the IV on these were so insane. Like I think they were like 600%. And so this stock then pairs off the open. I think there's some huge bid at 40 cents if I recall. We kind of like double bottom here, then we start to reclaim and hold up. So the real money shot, like if I could pick one place to go absolutely nuts on this whole stock, is this 60 cent. And so what's interesting, so I must confess, I actually sold some of the calls off the open here. I sold a huge, disgusting amount of calls actually of the weeklies for like $1, like the $1 strike. And I was really contemplating closing them down here, but I'm like, man, these things are so dumb. Like these are just going to expire worthless. And as we started to hold up, I'm like, oh God, I'm scared. I might end up, eating shit on these. And so this 60 cent consolidation, where we go down, we kind of tighten up, we get really tight. So the tension on this stock, like this stock is doing A+++ volume, like legendary epic volume. So, okay. And Bob's asking, so the main source of conviction for the long is the short interest. I wouldn't even say necessarily the short interest. Like the short end interest is definitely one factor. The market context is another factor. The daily chart beaten down is another factor. But the volume is probably the biggest. The volume in the chart, like the volume's just stupid on this thing. And so we set up really nice against these opening range highs of 60 cents or so. And so I'm short a shit ton of calls. And I'm just like, oh my God, if this breaks 60 cents, like this thing could just be epic cent at this point. And so I was short a disgusting amount of calls. And so I'm like, oh my God, I need to buy. Not only do I want to hedge my short calls with equity, but I want to be net long. So I had a huge amount of equity I needed to buy. So I ended up buying, I think like 1 million shares on the 60 cent or so. And then I'm like, then we just don't really like the way we go 60 to 65. I'm just like, oh my God, this thing's going to take off like a rocket. And so then the pre-market highs were the 70 cent. And so then even at 70, I'm just trying to buy like 1 million plus more. And even though this shoots up there and then pulls in, my thought is just like the volume on this is so insane. There's so many people that sold huge calls. Like the amount of call volume that was going off was so incredibly high. And in this market, I'm like, man, this can get super twisted. So even on these dips, again, I think like a lot of what I do publicly is like, I'm trying to give the most simplistic system that's going to resonate and people can understand as far as like prior bar highs and stuff like that. But so because of my view and the volume and everything else, like not only am I not selling when this breaks prior bar highs in places like this, the other thing too is you need to factor in commissions. Like I'm not going to try and make 3 cents when I'm probably paying like a penny in commissions. I really think this thing big picture can be sent. And so even here, like I still think, oh my God, this stock could really dislodge. So I'm actually bidding into these dips, probably against 60 cents is my true stop. So I'm really just trying to accumulate millions of shares. And then the other ad is, not that it was so great, but I think you can even add there. And And so a lot of that is just the oh God, I hate this thing, is the volume and everything else. And so I ended up selling like a pretty good chunk in here. But then like, especially when this failed here, I ended up getting out of like a pretty good chunk as well. So I did well on this trade. Nothing, that crazy. I mean, I would have murdered it, but I was also like, a lot of my position was just simply to like, I think I was long like 2.5 million, but I think 1 million of them was just to like simply protect my short calls. And so then like, once this kind of collapsed, I pretty much just got flat the rest of the stock, and I got flat those calls. So I took like a pretty big L on the short calls, but a big W on the equity. And so then let's see. So what's interesting is then pre-market, we start to perk up again. So we don't break these highs. We don't break a buck. So I don't want to be long, but like, man, you just got to say like, God, is this going to do something crazy? And so then this next day, this was, I don't think, or what day was this? I think I was watching this in the morning, but I ended up this. Oh yeah, this was the day of the Traders for a Cause happy hour. So, and I was doing like a trader lunch. So this I wasn't able to trade either, but once you get above a buck, so, oh my God, I'm so tired of this stupid thing. Okay, so once we get above $1, like, I don't think this setup is good enough, like intraday, for me to want to buy this. Like, if I'm short, I'm definitely covering a buck, which is kind of around those prior day highs. But yeah, I don't think this setup is so fantastic. So I'm probably just not doing much here. You know, the consolidation isn't so great. Where I do think we start to get okay is after this consolidation. Not that I love this, but if I had to pick a spot to be long, you know, it's pretty much above these highs. And again, people might ask like, oh, why aren't you selling there? Because we haven't really gone anywhere yet. Like, I don't blindly use prior bar highs. Like, if we haven't gone too far, I'm just going to give that level as a stop. Again, I don't love this setup either. Like, I don't think I would have done too much. Same for this 150. Like, yes, it works and gets epic cent. But I don't think I'm, you know, doing so much there either. So this is where we start to really get extended. We start to be skipping and going limit up, limit up. And so that's where I want to be open for a turn. I don't think there's anything wrong with shorting this turn. You can either do it intra-bar with a stop at the highs, or you can add on the limit. And especially when we pull back into the moving average, like, and again, I'll have a video on this on Magnum Opus, but this is where like I felt very likely this moving average could be support. And so like, this is where I want to cover and even bid into this, because that's such a big pullback, right? To go from 233 into 170 or whatever. So then, you know, this is kind of no man's land area. Where that breaks though is essentially this $160. I do think this, or you could, yeah, I mean, probably $160 is where I want to wait for that break, where this is almost head and shoulder-esque again. Shorting 160, that's a pretty big move. And the same thing where like, I'm totally open to being short than flipping long on something like that. Then the rest of this for me, like all this is no man's land. So I think like no man's land is just such an important topic, and you recognize that just like swaths of trading each day is just kind of like, you're better off not touching. I'm not saying there's no money in it. I'm not saying I don't make exceptions, but just as a general rule, like I'm really avoiding like whole chunks of this, just waiting for like kind of major range breaks. But then we really get the craziness. Let's see. So we gap up above those 240 highs the next day. So one thing, so actually I did trade this a little bit. Although I missed the bulk of the move, because I mean, this was kind of a shame. Oh, so this being faded like this, I really, really did not trust this down move to work. Like, this was kind of steady, kind of gradual. And I felt like it's a lot of people just piling on qualitatively. And the thing is, this thing was doing just so much volume. that I felt like, man, like it's very likely this just isn't going to kind of die like that. And it had been so resilient, like even pre-market it had been resilient. So I did trade just the open where I was buying into this down move, and then I kind of just sold into this pop. Um, then the rest of the day I was gone for the impact competition. I do think you need to be very open towards buying this $3 break. Like I actually do, yes, this kind of failed, but I actually do think this right here was worth it. I don't know what it looked like on the box at the time, but this stuff can just really go sometimes. Sure enough, we did kind of go like I don't love any long or short anywhere in here. Where I do think you need to start to be open-minded is like one, this volume was pretty insane overall. And just on the daily chart, like, yes, you need to be like when the stock's at 33 cents, you need to be super, super scared of this daily chart. But when the stock has gone up, like, I don't know, 20, 30, 40x, whatever it went up from the original move, that's when you need to start to think like, okay, we're on like, I think this was like day 4 of the up move. That's when you can start to be like, okay, I'm starting to call bullshit on this. Like, we're not going back to like 15 or 10 or whatever. The other thing too, and again, I know selling options is dangerous, but so shorting, yada yada yada. Like the June calls were going for so much on this move, so I ended up selling some of the Junes, and like that was something where it's like, look, I can't day trade this, I can't watch the stock all day, but like I think like the June 4s were maybe going for like I don't know, like $3. And it's like the odds that this thing just totally collapses like within the next week just seemed super, super high. And it's like, I don't know. Um, it's one of those things where the stock is essentially on the verge of delisting and bankruptcy. So it's like, if this is going to squeeze, like, man, I can get like a month worth of premium. But anywho, but where I do think you like, this is a big move and it's day 4. Like the most important part I would emphasize on this is I don't think this intraday is so great. But I think the most emphatic point is simply that it's day 4 of this up move and it's coming from like essentially like 10 cents. Like I think 10 cents is where we started on this stock. So it's gone up, yeah, like what, 400x essentially. Or sorry, 40x. Okay, so this 350, first of all, just because we stopped there a couple times, like again, I don't love this intraday, but the liquidity on this thing is just so enormous that I think you can really hit, 350 and give it a pretty tight stop. And then when this rolls, like especially once this cracks the 3, or cracks down here, then bounces. Like now I'm kind of thinking like this might potentially be backside just because, right? We did higher highs, higher low, higher highs, kind of slightly higher low, higher highs, higher low. Then all of a sudden we have, like the lower low, we get the lower highs. And now this is where I'm starting to think game on. This isn't quite enough consolidation, so it doesn't quite surprise me that this shorted then came back above. Like I'd almost equate this kind of to like the AMC short where it's like, like it's just we just were at 335. I'm not so eager to short that, but once we kind of start to tighten up here, I don't mind getting re back in. So nowhere do I love any of this so much, but I think a lot of these legs are okay. And then I think places where you go 250 down here and you halt limit down, I do not mind buying into some of these turns just because this is so snappy. Where I do think one of the best setups is though, oh God, one of the best setups is probably this 150 break. Because now it's so clear that this stock is backside, right? Like we've gone from $4 to $1.75 now. That's a steep bounce, but then we start to really roll over. I wish this was even better. So again, I don't think this was some A plus, but I think you really need to you need to go for it. And the thing is you can get just so much liquidity on this. Like I know a lot of people, this is what I would say. A lot of people kind of did some big picture swing shorts in this and really, really crushed Friday. But I think the people that crushed Friday were also the people kind of taking a lot of heat the prior days. Like Friday was good, but this intraday to me was not like so amazing. It kind of was fairly choppy and like not great consolidations and not like amazing bouncy balls. So do I think this FFIE was good? Do I know people that put up really good numbers? Yes. But I think a lot of people were kind of also taking heat on the way up or getting just like ripped on all the times where like it was a subpar setup and you would buy the break and it would wick down, or it was a subpar setup, you'd short the break and it would wick up. So I mean, if I had to pick one spot, I think that 60 cent long was probably the only just like total money shot. Because even this $3 one, like this had potential to be amazing, but it's just not so great of a consolidation. Like a lot of these just are not consolidating long enough or clean enough or tight enough. So yeah, the daily was super crazy, but if you're just trading the daily, you're the type of trader that again probably took some heat. And what I would say is by far the best part of this is just simply kind of just day 4 euphoricness. And I mean, if we go to this daily, like yeah, big picture, it's nothing, but near term, we're effectively going what 5-6 cents to $4 or so. Yeah, that's pretty damn crazy. Any questions on that? So, I mean, I do think GME AMC was far better and scalable and less risky. Like, I mean, some of this stuff, like these things can really break. Like, in no way do I want to be averaging into this. Even when this gets like close to $4, even on day 4, like stuff can do stupid things, especially when you have a huge amount. The short interest, I actually don't think is that relevant because the volume this was doing, like you can cover that in 2 seconds. But what I do think is relevant is there were just so much options volume going off. The volume and float turnover is like, it was just so high on these days. I mean, the volume was just doing billions of shares. So that's where I think like to some degree price can become somewhat fugazi, especially if it starts halting limit up. Like if some major player is short like 30 million of these somehow or 20 million and gets offsides, this stuff can really break. The other thing that surprised me was like Interactive Brokers I think had like 4 or 5 or 6 million shares short available. I was just like, what the hell? Like based on the float, how do they have so many shares short? Then you look at like the options and I'm just like, I was short at times like 1.5 million shares worth of calls. And I was just like, God, like there must be so many people just totally offsides on this. And so overall, like I kind of get a little conservative shorting stuff like this. Like I don't mind doing the intraday, but I'm definitely not going to swing anything against me on this. And those intradays just didn't like drive me wild. So I think like AMC GME for like an elite trader were definitely like 7-figure potential. Like I think this was, I think like my buddy asked me like, okay, what would a top 10 trader make on this? What would a number 1 trader make on this? And my line was like, I think 100K for an experienced advanced trader is reasonable. And I think 3 to 500K is probably about right for a really, elite trader. And then once I started asking around, those numbers ended up being like fairly on point. So, scalability like AMC GME dwarfs this. I'm sure there's people out there that made far more than I did in those other ones. And I'm sure everyone crushed me in FFIE because I didn't, get to trade this so much. All right. What can I answer from here? I think a lot of this was fairly exhaustive. How does everyone feel? Do people feel like this was worthwhile and good? I know the market really, okay, Zach liked, Parker liked, good. The market for this isn't really supposed to be like total newbies. Sam gives me thumbs up. Thank you. But what's important to me is I really want to make sure you all find value. I thank you, Bob, for the kind words. Like I recognize that $1,000 is a lot for a lot of people. Keep in mind though, that for most people in the US, thank you, Dan, thank you, Sven. For most people in the US, this should be tax deductible. I don't want to speak for your accountants, and I can get in trouble doing that. But you know, the way I look at it is, regardless, if you're able to make $1,000 trade, you clear the cost of this, and especially over the career, like the knowledge from this lesson and reviewing this, it's like that doesn't just last 1 year, that ideally lasts a lifetime. And so the way I think about it is, even if you got like a couple $100 per year of value, if you avoid one no man's land trade, or if you just catch one extra long, or if you even just learned anything from this video, as kind of like a intermediate advanced elite trader, it should be super creative, which is kind of why I do it. Thank you, Felix. I appreciate the kind words as well. So yeah, happy to take any more questions. I'll also be sending out this recording. I'll be sending out a lot of bonus content. As it, you know, 2 to 3K days are nothing to sneeze at either. Like the most important thing to recognize, by the way, guys, is like the beauty of trading is you might have a 2K day, but the more important thing is like, wow, doing the actions that I took, what could I have actually made? And a lot of this stuff has scalability. And so it can be totally true that if you just gradually grow over time, that 2K or 3K day might become 3.5. That 3.5K day in a couple months might be a 5K day. And like, I would argue even a couple grand a day, that is nothing to sneeze at. Yes, people, you know, that will net out with losses. But the number one thing is just to get to the point where you can make a living at this job. Once you can make a living, that's all that matters. And then just never take your foot off the gas. Always try to seek to learn, always seek to do reviews, always seek to refine. And then the sky's the limit at that point. And I've seen so many people start off as modest traders. And so actually, I'm going to be doing an interview in a month or so, or a couple weeks, I guess, at this point. And it's with Trillium, and I think the plan is to make it public, and it's going to show my equity curve. And my equity curve, first of all, was going negative for the first year or two. And what you see is the curve was like, boop, and it starts to go up. Then it goes whoop, super parabolic. And so you need to recognize that like everything you're doing P&L wise, as you grow, it's just going to become a rounding error as long as you keep on working and keep on pushing. So I got a question from Bob. In general, what do I expect the markets to do in the next few months? Lots of experienced traders are saying we should be going up to the election. So I would say, Bob, I really try not to have a view. In fact, I very intentionally don't have views on stuff like that. Like, I think a lot of forecasts are just like unknowable. Something as complex, like the amount of inputs to what makes a good market, let alone things trading cleanly and everything else. Like you can have stuff moving, but it's hard to trade, or you can even take rips because it sets up shitty. There's so many variables that it takes for a good trading market. And every single one individually is beyond my understanding. Then when you aggregate them all, I just have no strong views. What I would say is like the beginning of this year has been pretty epic. Between the crypto moves, the SMCI, Nvidia, ARM, now we got the GameStop stuff. It's been a pretty damn good year. Like, yes, we've got the election, but man, I mean, it's if you know, God willing, it keeps on going. But you know, as I always say, you just want to make hay while the sun's shining and do your best to learn. And then when it's slower, especially when it's slow, that's when you really want to review and do even more. Let's see. So then one other thing now is, so how do we get conviction? Lack of conviction is my number one issue. Where does conviction stem from? Conviction really stems from experience and knowing your stuff really, really well. I did a public free video on my golf Lima trade, Global Life. How did that stock ended up bouncing 100% plus from where I was buying. And I pretty much was the bottom of that stock, buying huge size in that thing. And where does conviction come from? Conviction comes from experience and knowing your stuff really well, and staying rational. And so I have this one intern helping me with the course, and he was going through my notes and he pulled up this ticker, Golf Delta Sierra, GDS. this had a short report and it epic melted, and this stock ended up making the same type of bounce and the same type of move that GL did. And so like when I'm trading stuff like GL, I kind of have this framework of all these data points being imprinted in my brain and having the data of how well these things bounce and just knowing that like, look, I have this experience and this is what my gut tells me. And so that essentially over time leads to conviction. And when you're a newer, not, I mean, by all metrics, you are a successful trader based on what you're doing. But if you're more newer or you're looking for much more, what I would say is like that conviction, like the newer you are, it's actually healthy to have a lack of conviction because that prevents you from doing anything too dumb or being too stubborn or too overconfident. So I'd actually say a lack of conviction early on in your experience process is actually a good thing because it protects you. It serves a purpose. But the more data points and the more markets you've seen, the more you can be confident in your stuff. Never overconfident. Like even me, right? I've been trading maybe 13 years now, 13, 14 years. I never want to be overconfident or stubborn. I always want to listen to the chart, but I have so many markets in my head. I have so many thousands of charts in my head. I have so many data points that I can rely on to give me what is hopefully a healthy level of conviction. Right. So I can think, look, it's likely the odds are in my favor that GME has topped. I don't think the odds are in favor of GME going above 120. Like I can make all these views based on data and experience, but I'm never unhealthily convicted where I say, oh my God, I'm going all in short 60. Like I don't care where this, like I never want to do that. So I would say it's just a matter of experience and gradual increasing your size and everything else. But there's nothing wrong with being like having a lack of conviction early on because that protects you. Dan is asking, did I trade HKD in 2022? Yes. Let's see. Oh God, is this going to be a pain? What's this doing now? Oh, there it is. I had the Zoom covering it. Yes, I did, but nothing too crazy. Like this is an example of something that was right. It was just no short, like just essentially no float, dangerous short, broken prices. And so did I trade this? Yes, like barely though. Like for the most part, I was scared. And I didn't find this that tradable and like the halt risk and everything else. So I don't think I did anything meaningful. Like I think I ended up losing like 40K in it. And like a lot of the halts were just super scary. And it was just like, look, this isn't, yes, it's making an epic move, but I don't need to be a hero. I didn't feel any strong ability to trade that or control my risk. So yes, I traded it. No, I didn't do anything. And I think I lost money. Rounding error. But yeah.
As far as your idea generation goes, and like you were talking about finding conviction on trades, when you're considering like a thesis for something like the GME short and the AMC short, for example, are you actively thinking about like who am I going to take money from here?
Not really, just because so one of my big things is like I try not to make too many assumptions more than I need to. Like a lot of people ask me, oh my God, do you think this is short's going to be getting blown out? Oh my God, do you think this is short covering? Oh my God, do you think this is profit taking? Oh my God, do you think these are options market makers twisted? Like all those questions are kind of like unknowable and unanswerable. And like, I'm not sure it really affects what I'm doing anyways that much. Like, I don't want to be totally blind and not think of that stuff, but for the most part, like, no, like the overwhelming thing is 90%. I'm really just listening to the chart and like, I might have a view like, okay, that's probably the top. We're not going above 120. And I have these heuristics and rules, but a lot is I'm just really listening to the chart. And like the markets are such an amalgamation of like so many different players So like between like HFTs and market makers and people hedging options and swing traders and day traders and hedge funds and like retail traders focusing on long, retail traders focusing on short, like prop traders, like there's just so many participants involved, and like it's like one thing I really hate is so many people will be like, oh my God, uh the algos controlled the stock, or like, oh man, they really sent this thing, or like, man, they're just man, well played, man, they really controlled this one. Like, it's so, that is just so dumb to me. Like, who is this they? Like whoever this they is, like they really don't exist. It isn't a they. It's just the mix of everyone doing their own individual trade decisions. So it's like, yeah, I'm sure there's someone getting blown out or this or that, but like making assumptions, it just doesn't really, it doesn't help me, and I just try to avoid it. Like unless it's actionable, like, oh, because it's if XYZ is on the other side of this, that means I should be doing ABC. Like if that were true, I would do that, but I just don't find it's actionable to me. And like at the end of the day, the chart rules. And like if I start to be like, oh my God, the people, these apes are so dumb. Like I can't believe they think this stock's gonna go up, and I just stubbornly short at 30 or 40 and it goes to 80. Well, I've blown up anyways. So how smart am I? So no. The long answer is I don't waste time thinking about that too much. After how many years would you say you started doing some consistent 20K plus days? Did having a much bigger account / more money and assets generally make it easier to get to the next level? I would say, so I started really slow. Like it probably took me like 2 months to start to, or sorry, 2 years to start to make money. But once I did start to make money, I conceptually was able to ramp it up pretty quick. So I would say, I think like the fall / winter of the 2 year mark, I started to really ramp it up. Like I think we had like a pretty good IPO market, and I really, it was fairly replicable where it's like, okay, like I can start getting more aggressive in this. Um, but man, I would say, I mean, this is also a hard question because I don't know what defines consistent 20K plus days. Like even in my later years, like if it's a slow market, I'm not doing consistent 20K plus days. Like it really depends the market and consistent. Like if we're talking about like a couple 20K plus days per month, I would say that probably took me maybe 4 years in. If you're talking about, was I making 20K plus every day? I'd say in like 2020 and 2021 I was, but like, 2022 was pretty slow. So generally normal market conditions. Yeah, I mean, I would have a couple 5-figure days a month by like year 4 and 5. In years probably like 8, 9, 10, like 7, 8, 9. Like in 2018 and 19, before the craziness, I would have a couple 100K days per month. I would say I really started to hit elite level maybe in like 2018, 19 or so. Then yeah, I don't know. So I hope that helps, but it's kind of hard, and my memory is not perfect either. Did having a bigger account or more money make it easier? Not I mean, not really, because I'm sure like even if I wasn't working for a firm, like the profits I had made anyways would have brought me to that level. Like I was moving fairly gradually, and it's like I'm sure if I was like a retail trader, the profits I had made would have kind of covered that anyways. So no, I don't think it necessarily helped. I think what was helpful about being on the prop side is you see other people making bigger money than you. Like I think it's immensely powerful to make $1,000 trading 2,000 shares. Then the person next to you made 5,000, trading more shares. And you're like, wait a second, we did the same trade. If he did that, like I can do that next time. So I think the most powerful part was just seeing people make bigger trades than you and realize like, wait, like I can do that. There's nothing different. When you enter into an order on breakouts, are you doing market order or limit? I'm pretty much always doing limit orders. I would say without exception, I'm always doing limit orders. But in general, I'm taking liquidity. So meaning I'm often doing limit art. Like if I'm buying, I'm doing a limit through the offer, through the ask. If I'm selling, I'm doing a limit order below the bid. All right. Any final questions from anyone? Any final thoughts? Again, thank you all for the support. I will be sending out the recording. It's probably going to take a while for this video to, this is going to be a big video. So it's going to take a while to process and upload, but I can probably get that tomorrow and some bonus stuff. Any other final questions?
Yeah. All right. Last thing. So as
Yep.
far as you really emphasize how charts are
Yep.
what tell you which way to go. And you mentioned on your AMC GME example where you had the daily chart and then you had like the big parabolic and pre-market that one day that really convinced you that this was kind of like it's time to short now. So by that, you would say that you primarily will use a bigger time frame to give you an idea of what to expect for the smaller time frame. But obviously, it's not just going to be jamming a short bias, on a smaller time frame like that.
Yep. So, and this will also come out in the course. As a very rough rule, again, like it's most of these things are just rough rules, and there's always exceptions. I would say I got to make sure my math even adds up when I spitball this. I would say like the intraday chart is probably 60% of my weighting. I would say the daily chart is probably 10% of the weighting, or maybe 15%. Then the daily chart, or wait, 15% is the daily chart. Then maybe 10% is like the box. Then maybe 5% is the long-term, like multi-year chart. I don't even know if I added up to 100% there, but pretty much that's like the intraday. Being an intraday trader, the intraday setup is pretty much, as a general rule, always going to have the heaviest weight for me. And like all of that stuff is so much more important than like my views or biases or like, short interest or whatever else. Yeah, so overall, thank you all so much. I'm glad you guys found this so useful. This would not be so badass if I didn't have so many of you asking questions. So really appreciate it. And really what I would say for all of you guys looking to improve your game, like just constantly try to make those little improvements and just rewatch this video, right? Like focus on the nuances that I'm talking about. And if you don't watch my free YouTube stuff, not that I have like that much, but like I have so many really great concepts, so many great details, so many great chart studies. There is a lot of free stuff out there so that you don't need to really pay anything. Be careful of all the furu crap, like, make sure people are actually good traders. Otherwise, you just waste your time going down, bad paths. And at the end of the day, like just always focus on like, don't leave that desk each day unless you've made like a little 1% improvement. There were some guys, during the week that kind of botched GME and AMC, but then they made some really good lessons from it. They improved their software, they improved their hotkeys, they improved their interpretation, they refined their lens. And really all we're doing as traders is each day we're taking data and our lens of the market, we use that data and what we did wrong to learn and just get a little bit more polished. Then eventually that framework is like crystal clear and it in the aggregate, it works, but it's only from taking all those losses and learning from them that we improve. If you don't learn from the losses or the mistakes, or if you don't do those review, you just can't get better. If I swing a golf club, if I hit 50 balls at the course every day at the driving range, but I'm not actually doing anything to get better, like, yes, I'm doing some practice, I might get marginally better, but it's nowhere going to improve my game if I'm just repeating the same mistakes, 2,500 times a week. So really just focus on those small incremental improvements and it adds up, and then stick with it. I know some of you guys have been trading many years, and the only goal, right? The market's going to determine your P&L to a large degree. The only goal is, did I get better each year and improve? And if you've not seen my video on the bobblehead concept, definitely Google it. And the only goal is your expected value over time getting better? And then the chips fall where they may. So with that, thank you all for attending. I'm going to wind this down. I will follow up with that link and appreciate all the support. Awesome review session, my friends.
Appreciate it, Lance.
Thank you.
Yeah, thanks a lot, Lance.